Chancellor Rishi Sunak warns of many more job losses to come. Plus, ABN AMRO's big revamp. The Dutch lender says it will exit all non-European corporate banking activities as it forecasts loan loss provisions at €3 billion for the year. Matt, what do the futures tell us?
Well, futures are a little bit mixed, although on the continent we see futures pointing down. In London, futures are a little bit higher. They're not big moves right now, about 0.2% in either direction. So it looks like the market still could see a little bit of volatility in early trading. Let's take a look at the global macro movers screen. Actually, this shows you a real lack of volatility. These gray boxes mean there's not really much movement in one direction or the other, and you see them across asset classes. The left-hand column is for live cash equity indexes, and as they open up, you'll see those boxes pop in, but they're all gray, as you can see. So we have some movement. The IBEX is down 0.4% in Madrid. The CAC 40 is down, as well as the DAX, 0.2%.
Good morning, everybody. Welcome to SG Trader, the live day trading channel. You can follow us for free, copy our trades, and make some profit. We trade live, our own funds in front of you and our clients, so they can see how profit been made. As you can see from yesterday, overnight we sold Japanese yen. We're already in profit, £200. And as I pointed out, we reopened position at 106.575. What you see on the screen, what we show you on the one screen of our trade station. You can see 5 Forex pairs. Japanese yen, I showed you already. British pound. Canadian dollar, euro, and Bitcoin. We trade live our own funds. 1 pip equal £100, except Bitcoin, where 1 pip equal £10. If you're looking to become a day trader or have your day trading as a second job, you need to, if you're new to this, you need to learn our style, our strategy. So follow our trades for a couple of days. If you like what we do, you need to get the strategy. Then practice on live trading sessions or through our saved trading sessions that you can find in our playlist on our SG Trader channel.
It has accelerated existing trends in the marketplace. I think from a monetary policy perspective, they've done a lot. I think rates are going to be looser for longer, and they're going to continue to do a lot. But there's only so much making effectively liquidity abundant is going to do. It's obviously pushed valuations up, and it's helped to push the market higher.
Are you concerned, Kurt, that some countries have handled the coronavirus crisis worse than others? And here it looks like, we hear that the U.S. has handled it, for example, worse than a lot of other European countries. Although, that having been said, U.S. equity indexes have outperformed European equity indexes year to date.
Sure. I mean, it really depends on what the metric that you're looking at in terms of who's outperforming whom. The U.S. clearly did not probably handle the early stages of this very well. I think we would have had probably a better, more stable path forward if there had been a coordinated response early in the pandemic. As we had sort of a hodgepodge of state actions across the United States that allowed that COVID situation to sort of fester along instead of getting squashed like it has in other countries, which means that although economic activity was probably less dire than it would have been, it does mean that it's going to persist for longer. So we're not going to have the clear, clean sort of break that other markets have had in terms of a start-stop to this whole pandemic.
And Kurt, where do you stand on gold? We see gold now down at 1,917. It's been up around the 2,000 mark, of course, a troy ounce. A lot of people linking it into conversations about what central banks are doing around fiat currencies, whether they're being devalued, about the inflation debate. And of course, the geopolitical tensions means other investors seek the safety of gold. Where do you stand on the precious metal?
Well, so there's a little bit of a divergence here between myself and my team, and I'll be the first to admit I've gotten it wrong. So my team have had a pretty substantial position in gold and have captured the bulk of this rally, and well done to them. The drivers for that, have been concerns about low real rates in the United States and a weak dollar, which has traditionally been gold supportive. My own personal concern is that I don't see the hyperinflation or the weakening of fiat money that you would need to justify shifting over to a hard currency or a gold as a hard currency in terms of its focus. So I personally don't really understand the rally. I've never been a gold bug, but my team has, and they've got it completely right.
It's interesting, yesterday we had this debate. Actually, very often we have this debate about whether or not we're going to see inflation, kind of on two levels, Kurt. On one level, will we see measured inflation? Most people say no, but the tail risk is getting much fatter. On another level, there are people who write to me every day that they see inflation no matter what the Bureau of Labor and Statistics says. What do you think?
Well, I think the inflation conundrum has been the central question for economists post-GFC. By almost any traditional metric, we should have seen more goods inflation than we've seen. And absolutely, there are pockets of inflation throughout the economy, not least of which has been asset prices. I mean, asset prices have continued to race ahead, and largely that's a function of cheap money. But in terms of goods inflation, if you define it that way, it's been a real mystery, and it's something that has allowed, I think, monetary policy officials throughout the world to maintain a looser policy than they otherwise normally would. I can tell you that all of the rules of thumb about the Taylor rule or a neutral real rate for the economy seem to have gone out the window, and this has persisted now for more than a decade. So it's going to cause a lot of people to rethink how monetary policy works.
Kurt, thanks very much. Stay with us. Kurt Custard from Newton Investment Management, where he is CIO, will stay with us on the programme to talk about the UK next. We're just seeing some reaction to the latest data we've got out of the UK. UK government bonds falling across the curve at the open. That as recession is confirmed for the UK. The UK economy shrank more than 20% in the second quarter. Of course, we already knew it had shrunk, along with many other economies, we should say, in the first quarter. But the fall in the second quarter does outstrip the other major European countries. We'll talk about the country's outlook next. This is Bloomberg. Welcome back to the European market open. 10 minutes into a trading day here in Europe, which the futures suggested would be fairly mixed, and it seems to be so, but the bias certainly towards the downside. Down 0.2%. The CAC and the DAX lose ground. The FTSE 100 is fairly flat. And let's focus on the UK. The UK economy shrank more than 20% in the second quarter, outstripping every major European country. The record slump pushes Britain into its first recession since 2009, raising questions over the government's handling of the pandemic. Chancellor Rishi Sunak warned of many more job losses in the coming months. Gilts opened lower across the board. Kurt Custard, Newton Investment Management CIO, is still with us. And I wonder if you could help us understand the market reaction that we're seeing here. As we see gilt markets move, we see gilts falling, yields rising across the curve then, Kurt. We see markets increasingly pricing in a small rate cut from the Bank of England, it would seem. Money markets pricing in a 10 basis point BOE rate cut in 2022 now. Where is the market thinking moving around this GDP number? I mean, we knew it was going to be bad. What is the new information, do you think, that the market is moving on?
Well, I never really know exactly what consensus is likely to be, but it seems like the number came in slightly better than consensus, and that could explain some of the movement. You know, I'm hesitant to focus too much on these quarter-over-quarter numbers because they are, you know, the base effect on these things, because these movements are so dramatic, is material. And so what I'm looking at when I focus on levels of economic recovery is really, you know, GDP level relative to the pre-crisis peak, right? And we're still a good ways off that, even with the rebound that we've seen in July and June here in the UK. So I think that we're still a long way. You know, I share the Chancellor's views that we're going to see more job losses after the furlough scheme ends. And I think that Q4 is going to be tough. I think Q4 is going to be tough around the Northern Hemisphere.
Yeah, I mean, we got a great picture, I think, of Wembley Stadium, where I guess people play soccer, but also Guns N' Roses played a legendary gig there in 1992 with Brian May. In any case, UK job losses apparently could fill Wembley Stadium 2.5 times. So, I mean, that just shows you how many people have already lost their jobs. And the ones that are set to lose their jobs, we've been talking earlier about the fact that 33% of employers using the furlough scheme plan to fire those workers when the scheme comes to an end. They're probably not out buying TVs and refrigerators, Kurt, right? They're already saving money and scared. You know, isn't this going to be worse for the UK economy than it will in countries like Germany, where we have a Kurzarbeit program that goes on for much longer, indefinitely?
I think you're right, Matt. I think it is going to be tougher here. It's going to be tougher here. It's going to be tougher in the U.S. As businesses try to realign supply and demand. As I mentioned earlier, I think the small and medium-sized enterprises are getting absolutely hammered, and I would expect that to continue. The potential silver lining is there does seem to be an appetite among a lot of governments to be able to extend programs or renew programs, et cetera, but we haven't seen any evidence of that yet. So as it sits now, without any evidence that governments are going to continue to re-up, if you will, or extend the sort of, furlough schemes, et cetera, I'd expect Q4 to be tough, and I would expect consumer behavior to reflect that anticipated toughness. And so I think we're going to see that continue going forward.
With all the big shifts that we're seeing in the way that consumers are spending their money or not spending it, Kurt, do you find it difficult to allocate to the UK? Maybe not enough tech businesses, quite a lot of services sector that rely on that face-to-face contact, or is that outdated? Do you find it easy or difficult to allocate to the UK at this point?
Well, what we try to do is focus on our themes, and our themes are really what we think are driving markets over the long term, medium to long term. And the UK sector composition isn't particularly favorable for some of these themes, right? So you still have some heavy industry here, you have oil, you have the banking sector, et cetera, which is transformation or is undergoing a transformation. And these things don't lend itself naturally to areas of growth where tech, is one of those areas by example. So I would say that, and we don't really allocate regionally. We allocate, as I said, on the basis of where we see the drivers in the global economy. But the UK as a region in the large cap space isn't particularly well suited.
Is there still a difference? Obviously, the FTSE 100 companies aren't just catering to the UK economy, right? These are very international companies.
Yep.
Maybe they'll move at some point, but is there still a concern about Brexit for you, Kurt? Because although all this COVID lockdown action has made us forget, that still has a due date at the end of the year.
Sure. I mean, I think we're in the point where Brexit is sort of in the mindset of everyone. It has happened. It's now moving on to the terms. I have never been one that was a massive doom and gloom person vis-a-vis Brexit. I thought it was more of a political exercise than it was an economic one. I think the economic systems, like the currency and interest rates, will adjust, and that's appropriate. So I'm not too worried about Brexit going forward. If you take a look at London house prices pre-COVID, but post the Brexit decision, they started to rebound, and we would expect that once COVID sort of relaxes, and actually as restrictions relax, we'll start to see increasing house prices going up. And that to me is more of an indication, especially around London, about whether there's external fear of Brexit going on.
Kurt, thanks very much. Thanks for joining us. Good to speak to you this morning. Kurt Custard, Newton Investment Management CIO. Kurt will actually be continuing the conversation with Matt and I on Bloomberg Radio, 9 a.m. UK time. We head over to Bloomberg Radio. You can find us there on London DAB or many other ways to listen online. Let's get a Bloomberg Business Flash for you now. Here's Laura Wright.
Thanks, Anna. ABN AMRO is undergoing a major revamp, exiting corporate finance outside of Europe. It will also stop providing trade and commodity financing altogether. It comes as the Dutch bank is trying to turn around its investment banking division, hard hit by the coronavirus crisis. Tesla is splitting its shares in a 5-for-1 exchange. It's an effort to make the stock less expensive for individual investors. This comes as the car maker's recent surge has pushed its valuation to around $250 billion. That's more than Ford and Toyota combined. Trading on this split basis will begin on August 31st. Microsoft is delaying Halo Infinite, the biggest video game planned for the November launch of its new console. It's partly due to the challenge of working from home during the coronavirus crisis. The delay of the latest entry in the multi-billion-dollar Halo franchise may hurt sales of the new Xbox Series X console. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there with your Business Flash. Coming up, telco takeover. Liberty Global agrees to buy Swiss phone carrier Sunrise in a $5 billion deal. Details next. This is Bloomberg.
Welcome back to the European Market Open. We are 21 minutes into a trading day that actually is turning increasingly positive. We priced in some of the losses on the US session at the end of the US day. We had to price those into the start of the European session today. But the FTSE 100 is up by 0.4%, and the DAX and the CAC are now almost flat. And so that helps us make some eke out some modest gains as US futures actually now point to the upside. Let's talk about a bit of M&A activity that's affecting European markets today. Liberty Global has agreed to buy Sunrise Communications in a deal that values the Swiss phone carrier at about $5.4 billion, about 5 billion Swiss francs. The cable giant offered 110 Swiss francs per share, which is a 28% premium to Sunrise closing share price on Tuesday. For more on this, we're joined now by Dave McCombs, who's media editor in Tokyo. Dave, good morning to you. What is the industry logic then for doing this deal?
Well, in a word, it's all about convergence. By combining these companies, that combines UPC Switzerland, which Liberty Global owns, with Sunrise, giving them basically almost a third of the market for the fixed broadband network. That allows them to compete in that space head-to-head with the giant Swisscom, the incumbent carrier. And it also allows them to compete more strongly in the cable TV industry. Now, that's an industry that's in contraction because a lot of television viewers want to jump to online, Netflix, that sort of thing. But if you are running a converged telecom company, you can benefit from that switch as well. So that's the logic behind this, is that it gives them scope across all three of those major businesses.
It's a pretty strong premium given how shaky the economic outlook has been. Why did they have to pay up so much?
Well, this was I think part of it is that the Sunrise's share price had been somewhat depressed because this is a deal that had been contemplated for another angle months ago. It was basically rejected when the idea was that Sunrise was going to buy UPC Switzerland, the unit of Liberty Global. So now it's kind of the other way around. You have Liberty Global buying Sunrise and combining the two that way. So after that deal had collapsed, basically the share price had gone down and dropped. If you look at this from the point of view of not the premium on the share price, but if you look at it relative to earnings, it's actually reasonably priced. You're at about 7.5 times EBITDA, and that's very similar to where you've got the giant Swisscom trades at about 6 times its EBITDA, its projected EBITDA. So it's within the range of what telecom companies are worth.
Okay, Dave, thanks very much. And I can see the share price, as you might expect with that kind of premium, the share price is up by 26.5%. For Sunrise in Switzerland, Dave McCombs, media editor, joining us there, happens to be in Tokyo, but on that beat. Thank you very much to Dave for that. Let's get to some of the stocks that are on the move, though, in the European session. 24 minutes into your trading day. And this is the share price we have for ASOS. The ASOS shares up by 9.8%. The stock's soaring as housebound shoppers keep more of what they buy. Apparently, this is one of the trends. More shopping online seems to be a big theme, of course, of lockdown. Novozymes also really interesting. Earnings predicting organic growth in a range of -2% to +2%. We spoke to the company a little bit earlier on about that, and that is a downgrade to the guidance they previously offered. And so the stock, as a result, is down by 4%. Admiral, also interesting in the insurance space. Admiral hits a record as lockdowns cut motor insurance claims, so fewer claims perhaps playing well for the bottom line over at Admiral. We will, Matt, in fact, why don't you weigh in here?
Well, I'm just looking at the market movement here, especially keeping in mind what we saw yesterday at the U.S. close. Real concerns that bled through to Asia. They haven't hit European stocks. You don't see, and remember, yesterday European stocks were up as well. So typically, when the U.S. falls after Europe gains, you see Europe play some catch-up and go back down to match them. Well, now you see European stocks that are still higher after a weak close yesterday. It has to be said, though, that we do see really strong futures in the U.S. Dow futures are up almost 1%. S&P 500 and NASDAQ futures are up 2/3 to 3/4 of 1%. So you do see, it does look like it'll be risk on there as well. Coming up here on Bloomberg Television, with COVID crushing the tourism industry, what is it going to take to get people traveling again? We're going to hear from the CEO, hopefully the answer to that question, from the CEO of Booking Holdings and the World Travel and Tourism Council CEO as well. Next, this is Bloomberg.
Welcome back to the European Market Open. 30 minutes into Wednesday's trading session here in Europe, and we're managing to eke out some gains now for European equities, up by 0.25% on the Stoxx 600 right now. US futures pointing higher. That is helping us get over the disappointment and perhaps confusion as to what happened at the end of the US session yesterday, where we saw some weakness. Let me get to the GRR function. That tells us where we are from a sector perspective. We've got a big focus on travel and leisure coming through in the program this morning. A couple of guests to hear from in the next 20 minutes or so to talk about that. And that's interesting to see that travel and leisure is the biggest losing sector. I suppose interesting in passing, because we did see a real rally in travel and leisure stocks in yesterday's session, and so we're perhaps just losing a little bit of ground off some of those stocks that have gained the most. To the upside, though, some of the more resilient sectors, so this is not a particularly risk-on rally that we're seeing today. We've got telecoms is the biggest gaining sector this morning, up by 2.2%. M&A, though, in that sector, in particular in Switzerland, part of the story. Now, a vaccine is needed for COVID-19 to restore confidence in leisure travel. That is the view of the Booking Holdings CEO, Glenn Glenn Fogel. Speaking with Bloomberg's Alex Steele and Guy Johnson, Fogel expressed confidence in the company's performance, but was uncertain about how the travel industry overall will fare post-pandemic.
Certainly people are seeing things better than the lows in April and March. It was horrible then. The things that you were just saying, certainly things have improved a bit. That being said, you're right. Until we get a vaccine or some sort of effective treatment, travel's going to have some issues. And look, it's great that things are better than they were, but we are all still far away. And you just heard those occupancy numbers, and let's face it, a half-filled hotel is not profitable. So what we really need is that sense of safety. People want to feel that it's okay to travel, and the thing that's going to help us get there is a vaccine, and hopefully we'll see something in the not-so-distant future.
Is the worst behind you, do you think, Glenn? Where do we go from here? Is it better, or is it kind of plateauing now? I'm curious as to the kind of trajectory you think we're on.
Well, I think a lot of people have been talking about recent flare-ups in different parts of the world, places that have been fairly good, but now all of a sudden there are coming out with more infections that are causing lockdowns. You look in Australia and Melbourne, you look at some of the issues that have happened in Hong Kong. There are parts of the world where things were great or very good, and now they're not so good. Even in Europe, as you're well familiar with, you're seeing a bunch of flare-ups here and there. So I think we're going to be on a bit of a roller coaster for quite a while until we get that vaccine. In my point, it doesn't really matter. We need that vaccine or some sort of effective treatment, because when you read these things, it's terrible news items when people are still getting ill, and unfortunately some people not making it through their illnesses. It scares people, and people want to feel safe. You're going to go on a holiday, you don't want to be nervous.
So, Glenn, I mean, all of that leads to, cash burn, et cetera. You didn't have to raise any cash so far. Your cash position is better than some of your peers. You are cutting some of the workforce, and I'm wondering how many levers left do you have to sort of make it through until there is a vaccine?
Well, I think we actually did raise over $4 billion. So we felt pretty good about that $4 billion raise. But, we are feeling comfortable in terms of where our balance sheet looks like, and we've been very clear to the street. We have no problem getting through this crisis. That being said, what will the other side of the hill look like? What's going to change in terms of the industry? And you're mentioning about business travel, and business travel does provide a lot of revenue to some of the big chains, and certainly the front of the airplane is where those people are paying those big fares, helping those airlines. And what's going to happen? Our people are going to be going on as many business trips as they did in the past. From our point of view, though, we're much more leisure-oriented. So there's a little bit of a silver lining for us, because when there's a lack of demand, well, those people on the supply side, they are more interested in working with a distributor like us to help fill that empty seat on a plane or an empty room in a hotel. That's unfortunately a little helpful to us, and you don't want it that way, but that's what's going to happen.
And that was Guy Johnson talking with the Booking Holdings CEO, Glenn Fogel. Guy Johnson and Alex Steele, I should point out, talking with the Booking Holdings CEO, Glenn Fogel. Joining us now is Gloria Guevara-Manso, World Travel and Tourism Council CEO. Gloria, what do you think about the necessity of a vaccine or some such treatment? What does the tourism industry need to see? Is that it?
Thank you for having me. I think the vaccine is great and is very important, but we cannot wait for the vaccine. I think we need to have a coordination among countries so that we can have a framework where we can have testing, contact tracing, and that would allow travel to resume. We need to learn from the countries that have been very successful, not only containing the spread, but also reopening. Unfortunately, not all the countries that they were successful containing the spread had a good strategy for reopening. But when you look at cases like Greece, for instance, or Iceland, where they were very successful containing the spread, and on top of that, they have a lot of testing and contact tracing, testing on arrival, and also the protocols in place, you can see that the recovery in travel is in a great path. So here what we're missing is the coordination among leaders, the coordination among countries. Unfortunately, you see decisions being made in silos without coordination with the private sector, and also without coordination among countries. And that's impacting, of course, the travel industry and millions of jobs that are being impacted. So far, 121 million worldwide. So That's what we would like to see before the vaccine is available.
Gloria, good morning. You can be very successful as a country at fighting the virus, but in a way that is very detrimental to the travel and tourism industry. I'm thinking of countries that have almost entirely shut borders or really restricted travel to and from. But from your perspective, then, what is the best outcome for you? Which are the examples that you can point to, the strategies that have managed to do both, control the virus and also allow people in and out?
Like, for instance, one case that it has been very interesting for us to follow is Iceland. Another one I mentioned is Greece. When you look at the number of cases that they had, is unbelievable. However, in the case of Greece, you can travel there. They apply a test on arrival. If you test positive, then you're isolated. If you test negative, then they allow you to download an app for contact tracing, and you can move around the country. So here, this is not a binary solution. It's not health versus the economy or health versus travel. We can have both if we have the right coordination. The problem is that they concentrated 100% of the efforts in just containing the spread, like, for instance, what we see in some countries like Australia and New Zealand, but they didn't have a clear path for the reopening, and that has been a challenge. You cannot live without travel because it's the backbone for trade and the economy, and that's going to be very painful, the recovery. It's going to be more like a U-shape than a V-shape, the recovery.
How do you think airlines have been dealing with this thus far? You know, just my personal experience in flying, I've noticed that not a lot of people were wearing masks properly in the plane. The flight attendants were hesitant to enforce the rules. A lot of rows had people sitting directly next to each other, even though you've just come out of an airport which constantly reminds you to stay 1.5 meters apart from any other people. I mean, what are airlines doing to make things better?
We believe that wearing a mask should be mandatory in all forms of transportation. Most of the airlines are reinforcing the fact of wearing the mask. If we all wear the mask, according to the medical evidence, 92 to 96% of the risk can be reduced. So we believe the airlines have implemented protocols, and those protocols are standard. Now, if there are some cases isolated, some airlines not reinforcing that, is unfortunately, but I believe most of the airlines are reinforcing wearing the mask. Same situation with the hotels. We have implemented protocols with all the knowledge that we acquired in the middle of the pandemic, where, as you remember, we offered... Go ahead.
What about the seating? I mean, clearly the seats in most airlines now are not large enough for your average adult passenger. I mean, we all know that, right? And if you're going to sit people directly next to each other so that we're touching no matter what, is that still a good idea?
Well, the reality is that the flights are not full. You don't find flights 100% capacity. You see a lot of flights less than 50% or 60%. Now, you're right, might not be a good idea to have someone next to you, but the reality is wearing a mask, having the sanitizer, and having other protocols, the experts will tell you that that will reduce the risk. Now, not wearing a mask and having someone next to you, of course, you have a higher risk of getting the spread. But here the point is wear the mask, follow the protocols, use sanitizer, and that would help you to reduce the risk. So the experts are telling us 3 components: wearing the mask, follow the protocols, wash your hands, and use sanitizer. And then the third one is the distance, as you mentioned.
Gloria, what size of industry do you think we will grow back to in terms of travel and tourism? Clearly, business travel is going to be challenged because people have seen the potential of doing things differently. Tourism also will be challenged by safety concerns and also people experiencing perhaps more domestic vacations. So what can be your expectation for the size of the rebound in travel and tourism?
Well, let's remember that before COVID, and travel and tourism contributes to 10% of the global GDP, 1 in 10 jobs. Yes, we have seen a strong domestic recovery in some markets, but to tell you the truth, our surprise has been China. The recovery, for instance, in business and MICE has been unprecedented. We didn't expect that so soon. They're having already meetings and events that we didn't anticipate. And same situation with other countries in Asia. So domestic leisure fairs, family vacations, adventure, culture, And then, of course, business follow. But we will see a strong recovery on business once we see a strong recovery on leisure, we believe.
All right, Gloria, thanks for joining us. Gloria Guevara-Manto, World Travel and Tourism Council CEO, talking about what the industry needs to recover from this unprecedented drop. Now, up next, Lebanon's government has fallen, but the next political chapter is still a ways off. We'll be discussing what's next with Charles Hollis, Phalanx Ascent Managing Director. This is Bloomberg. Welcome back to the European Open right now, just about 45 minutes into the session. You see the FTSE gaining 0.6%, but European equity indexes are mixed. Let's get the Bloomberg First Word News, your top stories from the terminal right now with Laura Wright in London. Laura?
Thanks, Matt. This morning, the UK confirmed it suffered the worst economic downturn in Europe. GDP for the second quarter slumped 20.4%. It will raise even more questions over the government's handling of the pandemic. The recovery is already underway, with output in June jumping 8.7%. But there are already worrying signs the bounce back may run out of steam. Democratic presidential candidate Joe Biden has picked Senator Kamala Harris as his running mate. She becomes the first black woman and first Asian American on a major party ticket. Harris is known as an aggressive campaigner. She has a legal background as District Attorney of San Francisco, then California Attorney General. Hong Kong media tycoon and democracy activist Jimmy Lai has been released on bail. He was arrested Monday under the city's new national security law, accused of collusion with foreign forces. It comes amid fears that China increasingly plans to suppress dissent in the city. Lai's Apple Daily has long been critical of Beijing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura Wright here in London. Now, after last week's blast in Beirut that killed more than 200 people, Lebanon's government has resigned. But Prime Minister Hassan Diab hit out at what he called a corrupt political elite that sabotaged his government. So how much will change in the nation, already suffering a political and financial crisis? Our next guest has decades of experience in political risk and government relations in the Middle East. Joining us now is Charles Hollis, Phalanx Ascent Managing Partner and former UK Foreign and Commonwealth Office diplomat. Charles, very good to speak to you and to tap into your insight. Yesterday we heard from a guest on one of our programs who said if there is political will, then change can happen in Lebanon. I wonder, in the Lebanese context, with the involvement of foreign interests and various domestic warlords, is there a will for change?
Good morning, Anna. Thank you for having me. Yeah, I think that's the absolute key question. Clearly, on the street level, there is a lot of anger and a lot of demand for change, but whether the really ossified political structure that exists in Lebanon can accommodate that without being torn up and rebuilt from the start is the big question. We've already heard signs of Hariri coming back as Prime Minister and Hezbollah offering unspecified concessions, but these just don't seem to us at Ascent anyway viable. I will only intensify public desire for a clean break and a new system led by an independent technocratic government. A political stitch-up that looks like business as usual seems much more likely to fuel anger than to calm it. And as you mentioned, there are a lot of entrenched interests, both economic and in the country and from outside the country, from Iran, Syria, Saudi Arabia and others, who really have a lot of capital in maintaining the current sectarian basis for Lebanon's government. So I must confess we are pessimistic about whether a new settlement can be found.
Saudi Arabia does seem very closely linked with the government. I remember their PM spent a long time in Saudi Arabia, possibly even against his will.
Yeah.
Is it possible that governments of Western countries, for example, France, obviously Emmanuel Macron has shown some interest, are capable of pushing back against the main interests in the Middle East enough to help Lebanon form a government free of warlords and such economic interests?
I think if the will and the economic clout was really put behind it, but I don't see that. I mean, the West in particular failed to stem the descent into chaos in Syria. Clearly, there's a much stronger emotional link between France and Lebanon, and people don't wish to see another failed state in the region. But there are a lot of domestic problems at present that Western governments need to look at. Iran, in particular, is very keen to shore up its deep-rooted links to Hezbollah. And it would take a large commitment, both in terms of political energy and money, if the international community were to really try and ring-fence Lebanon from that sort of external influence. Saudi Arabia, as you say,
Charles, we've already seen.
Sorry.
I was just going to say, we've already seen one failed state in the region, as you say, and there are now 1.5 million Syrian refugees actually in Lebanon. Is the prospect of another failed state enough to convince the international community that it is in their interests to do something financially or in some other way?
I think the numbers you're looking at are vast. The aid conference, which President Macron helped to coordinate last week, got promises of about $250 million of support. And yet, day before yesterday, the governor of Beirut has upgraded his estimates the cost of the repairs from the explosion to up to $15 billion. On top of that, you have the banking system, which has, by the Lebanese government's own calculations, has suffered losses of around $83 billion, which is, with the fall in Lebanese GDP is probably now around 200% of GDP. So the sums required to support Lebanon are massive. And I don't know if there is that amount of economic willpower in the West to try and put it back on a normal footing without enormous haircuts to the banking system and big economic dislocation.
Charles, thanks very much for your time this morning. Charles Hollis at Phalanx Ascent. He's a managing director there. He's also, of course, a former UK Foreign and Commonwealth Office diplomat and advised clients in the Middle East and worked at Kroll, etc. He's got a lot of experience, decades, as Anna said, in the region. Coming up, could dollar yuan be about to wake up to U.S.-China trade risks? We'll get the view from MLive's EM strategist Simon Flint next. This is Bloomberg.
Hard times are here. Hundreds of thousands of people have already lost their job, and sadly, many more will. But I will say to people, although tough decisions lie ahead for all of us, no one will be left without hope or opportunity.
That was the UK Chancellor Rishi Sunak speaking after the UK GDP print, the lowest since 2003, channeling Dickens perhaps a little more than he'd hoped to in his reference there to hard times. Let's check in on some UK assets. We've got the FTSE 100 up by 0.7%. There is always a link between what's going on the FTSE and what happens on cable. And actually, we saw cable bounce, but actually back to levels it had previously been during the session. So all in all, cable not changing very much. That is the pound against the US dollar at 130.47. So although we'd seen weakness in the pound ahead of that GDP number, really the GDP June figure coming in better than expected just lifted us back to where we had been. Where we have seen substantial movement, though, is in gilt markets, and we saw that gilt across the curve sold off and yields went higher. Matt?
All right, let's talk about the U.S. and China. After a brief spike on last month's Houston Chengdu consulate closures, dollar yuan has resumed its two-month downtrend. But could the pair be about to wake up to U.S.-China trade risks? Joining us now is Simon Flint, Bloomberg's emerging market strategist. Simon, what do you think?
Yeah, I agree. I think the yuan looks too strong considering the deterioration that we've seen in the U.S.-China relationship, and that does risk spilling over to the phase one one trade deal.
Simon, all right, apparently that's all we have time for. I appreciate you joining us. Simon Flint, Bloomberg's emerging market strategist. That's it for the European Open today. Stay with Bloomberg Television. Up next is surveillance. If you like, you can switch over to Bloomberg Radio. Anna and I are headed there right now. And I'll tell you what, if you're in the city, you can get it on London DAB digital radio. If you don't have that, you can just use your Bloomberg mobile app and find the radio button and click on Play Live. Otherwise, you can use any computer and just Google it, Bloomberg Radio, and then click on the live button. You'll hear more from us. This is Bloomberg.
Kamala Harris wins the Veep Stakes. Joe Biden picks a California senator to be his running mate. Harris becomes the first black woman and first Asian American on a major party presidential ticket. A record slump, the UK economy shrinks over 20% in the second quarter, worse than its European peers. The Chancellor Rishi Sunak warns of many more job losses to come. And vaccine deal, Moderna will manufacture and distribute 100 million doses of its experimental coronavirus vaccine in the US. Shares jump in extended trade. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, let's check on the markets. A lot going on in the markets, especially when you look at gold. Yesterday, we saw gold fall quite extensively. This is after its very rapid rise. Now, European stocks are actually rising with bond yields. Gold snapping back after dipping briefly below $1,900 an ounce. I'm also looking at HSBC, ABN AMRO actually offsetting some of the declines in technology and real estate shares on the stock 600, and then the pound holding on to the declines we saw yesterday as figures showed that the UK economy contracted more than any other in Europe in the second quarter. So we'll have plenty more of markets shortly, but now let's get straight to the Bloomberg First Word News. Here in London is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. This morning, the UK's confirmed it suffered the worst economic downturn in Europe. GDP for the second quarter slumped 20.4%. It will raise even more questions over the government's handling of the pandemic. The recovery is already underway, with output in June jumping 8.7%. But there are already worrying signs the bounce back may run out of steam.
Hard times are here. Hundreds of thousands of people have already lost their job, and sadly, many more will. But I will say to people, although tough decisions lie ahead for all of us, no one will be left without hope or opportunity.
China plans to bring up WeChat and TikTok at its upcoming trade talks with the US. Sources tell Bloomberg a virtual meeting is likely to take place as soon as this week. But we aren't certain what Beijing hopes to achieve in bringing up the apps. It comes just days after President Trump signed a ban on transactions using the two apps on national security grounds. A third night of protests in Belarus. Demonstrators took to the streets to challenge President Alexander Lukashenko's claim of a landslide election victory. He's vowed to continue with the police crackdown to secure his 26-year rule. The nation's opposition leader has fled to Lithuania after having been detained for hours on Monday. And Hong Kong media tycoon and democracy activist Jimmy Lai has been released on bail. He was arrested on Monday under the city's new national security law, accused of collusion with foreign forces. It comes amid fears that China is increasingly planning to suppress dissent in the city. Lai's Apple Daily has long been critical of Beijing. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now let's get the latest on the U.S. presidential election. And Joe Biden has picked Senator Kamala Harris to be his running mate. Now, Harris is the first black woman and first Asian American on a major party presidential ticket. Once arrival for the top job, the Californian senator of Indian and Jamaican heritage had long been considered the front runner for the number 2 slot. Well, joining us now for more is Jacob Parakilas. He's LSE Ideas Associate. Professor, thank you so much for joining us. When you look at the pick for vice president, how will it change Joe Biden's campaign?
Well, I think the deal with a Harris nomination is that it won't fundamentally change Biden's campaign. Biden is ahead in every single tracking poll. He's ahead in the poll aggregate. By any reasonable standard, Biden is winning right now. That's a very different thing from winning in November, but he is winning and he has been winning. And the first rule of politics, as almost anything else, is when you're winning, don't rock the boat. Harris was the obvious choice for a number of reasons. I think she had positioned herself very well to be the VP choice. She had been the bookmaker's favorite for some time now, and I think Biden took that axiom of when you're winning, don't rock the boat to heart. So I don't think it fundamentally changes the trajectory. I do think it will energize some parts of Biden's constituencies. I think, especially in the wake of the George Floyd protests, the resurgence of the Black Lives Matter movement, the fact that Biden put a woman of color on the ticket is very important. And I think the fact that he picked somebody who sort of has tried to find a middle ground between the progressive left of the party and the more moderate elements of the party is also a concession to the somewhat leftwards direction the Democrats have been taking on policy, along with Joe Biden's evolving positions on the environment and economic stimulus and a few other issues.
But Jacob, if you look at the Joe Biden strategy so far, is it the fact that he's winning, or is it actually President Trump that's doing so badly? Because we haven't really heard from Joe Biden at all.
Well, we haven't heard from Joe Biden at all because there's been so much else going on. Biden has actually been giving speeches. He's been attending political events, with a certain amount of caution, both because, it would be because of his own caution about the potential of him or someone close to him catching the coronavirus, but also because I think he's trying to model good behavior. He's usually seen in public wearing a mask in contrast to Trump. There's also the Napoleon maxim of, never interrupt your enemy while he's making a mistake. The public overwhelmingly doesn't trust Trump on his handling of the coronavirus crisis. They don't trust him on his handling of race relations. And increasingly, his strong suit, his handling of the economy, has been deteriorating. Biden's been leading him in some national polls on that front now. So, to an extent, Biden's best strategy is to just let Trump, give Trump enough rope. And I think that so far has been borne out. Again, we still have a little bit of time to run until November, but it's not that much time. And, the conventions are coming up in the next couple of weeks. After that, absentee ballots are going to start being distributed. A huge portion of the vote is going to be made before the 3rd of November. So the longer Biden can stay in this position where Trump is dominating headlines and tailing in polls, the stronger a position Biden will be in. And I think the pick of Harris sort of reinforces that strategy.
So, Jacob, you 100% trust the polls? Are there people out there that say they wouldn't vote for President Trump and then will vote for him come November?
Well, there's very little evidence of a shy Trump vote. The polls in 2016, for all the beating they took, did actually predict the national vote pretty effectively. There was a dearth of polling in the 3 crucial states which flipped from the Democrats to Trump: Michigan, Wisconsin, and Pennsylvania. And some of the final polls there were off. That's a very different thing from saying all polls all the time are wrong. Obviously, the big caveat is that this is going to be a very, very unusual election. We're in the midst of a pandemic. There's an almost unprecedented economic contraction or period of economic uncertainty, depending on what measure you're looking at, going on. President Trump is aggressively trying to reduce people's ability to use mail-in ballots, which may impact Biden's vote, it may impact his own, but will certainly change the way votes are counted. So,
okay, I think we just lost Jacob, but we'll get back to Jacob Parakilas there, LSE Ideas Associate, very shortly. Now let's talk about U.S. assets and risks going on to the November election. Joining us now is Silvia Ardagna, Managing Director in the Investment Strategy Group at Goldman Sachs Private Wealth Management. Silvia, thank you so much for joining us this morning. When you look at some of the risk factors out there, how do you look at the U.S. election and how does it actually change some of your investment advice depending on what administration we get in November?
Good morning, and thank you for having me on this program. We have a long-standing view of U.S. preeminence, and we keep recommending our clients to have an overexposure to U.S. risky assets. We don't see the election as being a pretty dramatic shift from a structural perspective. There are obviously 2 main economic themes that we think the markets and our clients will be focused on. First will be the tax policy in case of the Biden administration were to be in office. And second, clearly, what would happen to the dynamics between the U.S. and China and trade tension relationship in cases. On the first, what our research shows is that there is, not much of a difference between a Democratic or a Republican presidency. So on the, longer-term, medium-term impact of the on the U.S. equity market, what matters is clearly also whether we have a divided or a unified Congress. But despite the fact that our clients are quite focused on the possibility of tax hike in the EU, particularly on corporate taxes, our view is that once in office, Biden is unlikely to pursue, the full the tax agenda that he has in the pipeline. And this because initially the economy will still be weak and recovering from the pandemic, and there seems to be a widespread view that fiscal policy needs to remain pretty easy. In fact, if you also look at the current debate in Congress, Republicans and Democrats differ on the size of the fiscal stimulus package, where Democrats would like to have a larger package than the Republicans are suggesting. So even if there were to be some tax increase much milder than what's on the agenda in our view, that could be compensated by spending increases, which should continue to support the economic recovery. On the trade tension,
I was going to ask you a bit more about the trade tension. So how does it play out under a Biden administration? Are we going to see more antagonizing of China or less than what we've seen from the Trump administration?
Look, when we think at the structural issues that are going on between the US and China, not just in trade, but also in technology and geopolitics, we don't think that Democrats and Republicans are that apart in the sense that there is a widespread willingness to change the relationship that there have been so far. However, what can change is the way in which the relationship, the new relationship is put in place. Now, the current administration has obviously privileged tariffs and on goods to try to reduce the trade imbalances between the US and China. If there is, a more multilateral approach, less unilateral, less focused on tariffs, but more focused maybe on trying to get China respecting what are the international, playbooks in technology and trade. That could be a positive for the market. Our own research department has basically estimated very interestingly that about 10 billion increase in unexpected increase in tariffs on Chinese goods basically had detracted in 2019 something around 1.2% to the S&P. So if there were to be less antagonizing relationship that are focused on increases in tariffs, that could be welcomed by US risky assets. That's the conclusion of this report. Similarly, FX could benefit because when tariffs were imposed, the US dollar increased, Japanese yen appreciated, and EMFX basically depreciated as a consequence. So these kind of trades could be unwinded if tariffs are not the primary tool.
Silvia, thanks so much. Silvia Ardagna there from Goldman Sachs Private Wealth Management stays with us. Now, up next, Britain in recession. The UK economy shrank more than 20% in the second quarter, outstripping all major European countries. We'll talk about the country's outlook next. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francie Lacqua here in London. Now, the UK economy was hit harder than any other major European nation during the coronavirus lockdowns. Now, it saw a 20.4% contraction in the second quarter, which pushed the country into its deepest recession since records began. It raises questions over the government's handling of the pandemic and puts it under fresh pressure to deliver a recovery. Well, still with us, Silvia Ardagna from Goldman Sachs Private Wealth Management. Sylvia, thank you so much for staying with us. When you look at the UK and what you're looking at in gilts, you know, first of all, how much different of a path will this economy take, given what we've seen so far, but also Brexit looming at the end of the year?
Yes, we think that the UK will continue to underperform its peers. The contraction has been stronger than what we have seen in the euro area, stronger than what we have seen in the US. And when we look forward, we think that the UK economy will continue to recover, but at a slower pace than other major developed countries. Now, the recovery, the largest decline in activity so far has clearly been also driven by the fact that the lockdown has lasted longer because it was less severe initially, but there is evidence in high-frequency indicators that there is a pickup in activity, so clearly Q3 should see a pretty large rebound, but by the end of 2020, we would not still be back at the level of GDP that we had pre-pandemic in our own forecast. Now, this underperformance of the UK economy is not new. As you said, there are two challenges for the UK. One is the pandemic, which is new. The other is Brexit. And since the referendum, we have seen that the UK economy grew less than other peers, while before the referendum and after, since in all the period after the global financial crisis, the UK was one of the best performing developed countries. What we expect that the recovery will be fostered by continuous policy stimulus, both on the fiscal front and on the monetary front. We expect more fiscal stimulus in autumn. We expect the Bank of England to continue to create fiscal space and extend the QE at the turn of the year. We also think that Brexit will be happening with the minimal agreement on the good trade in terms of the UK being able to trade goods with no tariffs and no quota, but obviously having to fulfill all other kind of like trade barriers. So there will be some consequences, because clearly any good deal that will be stricken in these few months will be far less, comprehensive and beneficial in terms of trade with the European Union than it was under the single market. We think that the risk of trading under the WTO rules is non-trivial, but again, it's not our base case.
Sylvia, when you look at the 10-year Treasury yield, I mean, it jumped the most since June. We are expecting quite a lot of government and corporate debt issuance. Treasury bond yields climbed, cutting into the negative real rates that had supported gold, for example. So how do you see Treasuries developing from here?
Look, we have a very gradual increase, very little increase in Treasury yields over the next part of the year. You have two offsetting, variables here. On the one hand, clearly, as you said, there is going to be an increase in issuance. But on the other hand, we still have an environment where uncertainty is pretty large. And we have very accommodative monetary policy with the Fed remaining on for many years and continuing QE. So this this factor will provide a ceiling, both uncertainty and QE will provide, a ceiling to how much U.S. Treasury can increase. What we are recommending clients is to begin to take some exposure to a steeper U.S. curve between, the very front end and the long end, like at the 30-year level. So we have started a trade recommendation for a steepening between the 2 and the 3rd year, because we think that over the medium term, clearly long end U.S. yields are too low. If we think, as we do, that the economy will recover and will have many years of positive growth, and inflation will also get closer to the policy rate target of 2.5%. And markets are not pricing on a longer horizon this sufficiently in our view.
Silvia, thank you so much. Silvia Ardagna, their Managing Director in the Investment Strategy Group at Goldman Sachs Private Wealth Management. Now, coming up, the hard times are here. We'll have more on the UK's second quarter slump as the Chancellor warns there'll be many more job losses in the coming months. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, this is what the markets are looking at today. Now, stocks in Europe actually edging higher. This partly due to, of course, bond yields climbing globally and a little bit of a feeling that actually we will get some kind of stimulus, or certainly that maybe the markets are focusing on some of the advancement in terms of vaccine and medication. Now, gold snapping back after dipping briefly below 1,900 an ounce. I'm also looking at some of the bank stocks. So you can see the European bank stocks gaining 1%, HSBC, ABN AMRO offsetting declines in technology and real estate shares on the Europe's stock 600. Then the pound holding on to the decline yesterday. We did see some economic data showing that the UK economy contracted more than any other in Europe in the second quarter. Up next, ABN AMRO exits all corporate finance outside Europe in a major restructuring of its corporate and investment bank. We'll hear from the Dutch lender's Chief Financial Officer, Clifford Abrahams. He's coming up shortly, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Democratic presidential candidate Joe Biden has picked Senator Kamala Harris as his running mate. She becomes the first black woman and first Asian American on a major party ticket. Harris is known as an aggressive campaigner. She has a legal background as district attorney of San Francisco, then California Attorney General. The US is risking a crisis at the UN over Iran's sanctions. The Trump administration is planning to make a ban of arms deals with the Islamic Republic permanent. The restrictions were eased under the nuclear deal that President Trump quit more than 2 years ago. Russia and China have threatened to veto the proposal. US allies Germany and France may even side against it. White House economic advisor Larry Kudlow is dismissing concerns that tensions may jeopardize the US-China trade deal. He says the agreement is fine and that China is substantially increasing purchases of American goods. The deal in January paused the trade war between Washington and Beijing, but their relationship has deteriorated since then. And after last week's explosion, the United Nations is sending grain to Lebanon to avert a food crisis. It will ship 50,000 tons of wheat flour to Beirut, enough to supply the nation for 3 months. The blast on August the 4th tore through major grain silos in the capital, leaving the country with only 6 weeks of flour. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the UK has entered its deepest recession on record after a second quarter slump, with the economy contracting 20.4%. Now, the Chancellor, Rishi Sunak, says the data confirms that hard times are here, and he warned many more jobs will be lost in the coming months. Well, joining us now is Paul Dales. He's Chief UK Economist at Capital Economics. Paul, great to have you right here on Bloomberg Surveillance. What does that mean for BOE policy going forward?
Well, I think it means that the Bank of England is going to have to do much more than the financial markets currently expect. So I get the sense that the markets are expecting the Bank of England to expand its quantitative easing package by about £100 billion by the end of this year. But at Capital Economics, we think it'll eventually do £250 billion. In at least 3 steps. So the message here is that although actually in some ways the recession is already over because we know output is growing, it's going to feel like a recession for a long time. And I think policymakers are going to have to continue to give the economy more support.
Is QE enough, Paul, or are we going to see the Bank of England going into negative rates?
I wouldn't completely rule that out, but the Bank of England sent a fairly strong signal last week that it doesn't think it's going to use negative interest rates soon, or at least while it is worried that the banks are on the hook for loan losses. So for me, that probably rules out negative interest rates for the next 6 months, maybe even the next 12 months. But it could be used at a later stage of the recovery when the recovery is well underway, banks are doing okay, and the economy needs a bit of a burst. So I think the message is that there is going to be more policy support. I think the bulk of it will come through QE, but there's also going to be a few other things thrown in there, probably forward guidance and the like. So it's about a package of measures, really, rather than just focusing on one policy, such as negative interest rates.
Paul, what does this all mean for pound?
Well, I think the global influences have certainly helped the pound in recent months, with the weakness of the dollar having raised it to 130 against the US dollar. Now, our forecast at Capital Economics is that it actually takes another leg up to about 135. But that's based on our assumption for Brexit, actually. That old thing we used to talk about a long time before the coronavirus came along. And our working assumption is there will be some kind of Brexit deal at the end of this year, probably a very slim trade deal, maybe a bit of a fudge here and there. And I think that could be enough to give the pound a bit of a boost. So even if the Bank of England were to loosen policy much more, as long as there is a Brexit deal at the end of this year, I think the pound could end the year around 135 against the US dollar and perhaps 113 against the euro.
Paul, how do you view yield curve control and some of the other things that the Bank of England could do possibly before going into negative rates?
Well, It's one of those things that we've all talked about. And again, I wouldn't rule out anything in this situation. I think over the next 6 to 12 months, it'll become clear that central banks around the world need to do more, and they'll become increasingly innovative. But the Bank of England has said that it's not very keen on yield curve control. And you could also say that there's not much point of it at the moment. We know that gilt yields are very low right across the curve, with the 10-year yield around below 25 basis points at the moment. So unless you're going to target yields much lower than that, you're not going to get much bang for your buck for it. And it could mean that you'd be on the hook for buying huge amounts of assets in order to maintain that yield curve target. So I think the main policy tool, although it will come alongside other forms of forward guidance, is going to be quantitative easing. And that's why we think quantitative easing could be expanded by another £250 billion, which would take the stock of asset purchases owned by the bank to just under £1 trillion.
Great, thank you so much. Paul Dales there, Chief UK Economist at Capital Economics, joining us this morning. Now, ABN AMRO announced a major restructuring this morning. The Dutch lender is set to cut a third of its investment bank and stop providing corporate finance outside of Europe. Well, we've been speaking to the CFO, Clifford Abrahams.
Our loan loss provisions in Q2 were around 700 million, which is a decent amount, which is why we are break even for Q2. But those provisions were down on Q1, and we expect impairments for the second half of the year to be again below the first half of the year. So it's possible we peak for this year. We expect impairments again to be elevated next year, but likely down on this year. So we're hopeful we've seen the worst in terms of overall impairments.
I wonder about the investment bank performance in the quarter and your plans for the division, for the unit in the future.
Yeah, our corporate bank outside Europe had a tough quarter. So most of those provisions, that 700 million, was in our corporate bank, and within that, a lot of that was in our global business. Our plans for that business going forward, outside Europe, we intend to wind down that business, and that's about 10% of the group. And that reflects our decision to focus the bank and the corporate bank on our home market of the Netherlands and Northwest Europe. We want to de-risk the group to a moderate risk profile, and we want to align the whole group to a common strategy. So we want the corporate bank to work closely with our other businesses here in Europe, and here in Europe we'll invest and grow those businesses.
So more focus on the core, more focus on the European business then, Clifford. Did you consider selling the parts of the business that you're now going to take 3 or 4 years to wind down?
That business, as I said, is around 10% of the group in terms of capital. We'll work with those clients, and we'll take our time in what is still a tough environment to wind down a business. And we'll do that to optimize the value of the group and do the right thing for our clients. We expect that wind down to be capital accretive over that period.
The CIB had some very large losses on individual clients recently, Clifford. How was it possible that ABN AMRO was involved in so many write-downs, and what are you doing to improve controls in that business?
Well, the environment has been tough, and we're a big bank that operates around the world. So we've seen perhaps more than our fair share of issues. We've taken a good hard look at our risk appetite across our businesses, in particular in the corporate bank and clearing, and tightened up our risk appetite where necessary. And as you can see, we're de-risking further some of those businesses where we've seen elevated impairments in the past.
Well, that was the ABN AMRO CFO, Clifford Abrahams, speaking to us earlier on. Now, coming up, vaccine deal. Moderna will manufacture and distribute 100 million doses of its experimental coronavirus vaccine in the U.S. Shares jump in extended trade. We'll discuss that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Investor Cole Icahn has scored a $1.3 billion windfall from getting against brick-and-mortar retailers. He started making the bet, the so-called mall short, in mid-2019. It played off in the first half of this year as the coronavirus led to even more store closures and more consumers shopping online. A major deal could be on the horizon for Brookfield. Sources tell Bloomberg the alternative asset manager is in talks to buy Blackstone's stake in Cheniere Energy Partners. Its holding in the liquefied natural gas company is worth about $7.8 billion. The company's declined to comment, and no official word on that deal just yet. And Microsoft is delaying Halo Infinite, the biggest video game planned for the November launch of its new console. It is partly due to the challenges of working from home during the coronavirus crisis. The delay of the latest entry in the multi-billion-dollar Halo franchise may hurt sales of the new Xbox Series X console. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, the battle against the coronavirus, Russia says it's approved the world's first COVID-19 vaccine. Critics say it still has to complete medical trials, which could take months. Well, the news comes as the U.S. has reached a deal with Moderna to provide 100 million doses of a potential vaccine. Now, that's alongside the deals it's already signed with Pfizer, BioNTech, and Johnson & Johnson. Well, for the latest on the race to secure a vaccine, we're joined by Bloomberg's healthcare reporter, James Payton. James, what do these countries snapping up supplies actually mean for the rest of the world?
Yeah, well, it's a good question. I mean, countries like the U.S. Clearly aren't waiting around to find out which of these vaccines are going to work. We've seen the Trump administration and the U.K. especially sprint ahead to lock up hundreds of millions of doses of future vaccines. The EU and Japan have also signed recent deals. This Moderna announcement is only the latest. I mean, before this pact, those wealthy economies had already secured more than 1 billion doses, and that number is only growing. So clearly, as you say, health advocates in some poorer regions are concerned that the rich countries will put their own interests first here, and there are a number of groups that are working hard to tackle that issue and prevent poor and middle-income nations from being at the back of the queue. There are efforts at WHO and Gavi and other global groups to try to bring about the equitable deployment of vaccines. But there's still big questions about the pace at which the rest of the world will get access. And, so this trend is only going to continue. The issue's going to heat up in the coming weeks and months. And, I think most people believe that there's going to be an inevitable supply deficit. We're talking about in a world of 7.8 billion people. So who will get the vaccines and how soon are crucial questions.
So how are vaccines like Moderna's actually being priced?
Yeah, the pricing is a complex one, trying to figure out how much to charge. Moderna is going to be selling this vaccine in the U.S. deal at roughly $15 a dose or $30 for a 2-dose regimen. The company's already receiving close to $1 billion in government assistance to test the vaccine. So that's one of the key factors that two sides had to take into account. You mentioned the Pfizer deal. That Pfizer's price is slightly more than what Moderna will get, but Pfizer hasn't received government funds for its project. A number of companies, such as AstraZeneca, which is Oxford University's partner, have pledged to profit during the period of the pandemic. Others have said they will profit. So companies are taking different approaches. Some hoping this will pay off in terms of reputation and long-term benefits. Others, like Moderna, are clearly keen to earn a return and keep investors who bid up the share price happy. So this is a tricky one because the industry has been slammed in the past for charging high prices, and given this is a global crisis and taxpayers are pouring billions into these efforts, it remains to be seen, whether that support is going to be reflected in the prices. And so many people, whether it's advocates, investors, governments, they're all watching this issue very closely.
Thank you so much. Our healthcare reporter there, James Payton. Now, we're also getting some breaking news actually out of Tencent. Second quarter operating profit is better than expected, just over 39 billion yuan. We were expecting a 35 billion yuan figure. Net income also in better than expected at 33 billion instead of the 27 that we were expecting. So we'll have plenty more, of course, on Tencent and maybe some of the trade wars and some of course, what we're seeing in terms of tensions in regards also to some of the technology stocks in China, what that means longer term for Tencent. Now, a vaccine is needed for COVID-19 to restore confidence in leisure travel. That's the view of Booking Holdings Chief Executive Glenn Fogel. Speaking with Bloomberg's Alex Steele and Guy Johnson, Fogel expressed confidence in the company's performance, but was uncertain about how the travel industry overall will fare post-pandemic.
Certainly people are seeing things better than the lows in April and March. It was horrible then. The things that you were just saying, certainly things have improved a bit. That being said, you're right. Until we get a vaccine or some sort of effective treatment, travel's going to have some issues. And look, it's great that things are better than they were, but we are all still far away. And you just heard those occupancy numbers, and let's face it, a half-filled hotel is not profitable. So what we really need is that sense of safety. People want to feel that it's okay to travel, and the thing that's going to help us get there is a vaccine, and hopefully we'll see something in the not-so-distant future.
Is the worst behind you, do you think, Glenn? Where do we go from here? Is it better, or is it kind of plateauing now? I'm curious as to the kind of trajectory you think we're on.
Well, I think a lot of people have been talking about recent flare-ups in different parts of the world, places that have been fairly good, but now all of a sudden there are coming out with more infections that are causing lockdowns. You look in Australia and Melbourne, you look at some of the issues that have happened in Hong Kong. There are parts of the world where things were great or very good, and now they're not so good. Even in Europe, as you're well familiar with, you're seeing a bunch of flare-ups here and there. So I think we're going to be on a bit of a roller coaster for quite a while until we get that vaccine. In my point, it doesn't really matter. We need that vaccine or some sort of effective treatment, because when you read these things, it's terrible news items when people are still getting ill. Unfortunately, some people not making it through their illnesses. It scares people, and people want to feel safe. You're going to go on a holiday.
Yeah.
You don't want to be nervous.
So, Glenn, I mean, all of that leads to, cash burn, et cetera. You didn't have to raise any cash so far. Your cash position is better than some of your peers. You are cutting some of the workforce, and I'm wondering how many levers left do you have to sort of make it through until there is a vaccine?
Well, I think we actually did raise over $4 billion. So we felt pretty good about that $4 billion raise. But, we are feeling comfortable in terms of where our balance sheet looks like, and we've been very clear to the street. We have no problem getting through this crisis. That being said, what will the other side of the hill look like? What's going to change in terms of the industry? And you're mentioning about business travel, and business travel does provide a lot of revenue to some of the big chains, and certainly the front of the airplane is where those people are paying those big fares, helping those airlines. And what's going to happen? Our people are going to be going on as many business trips as they did in the past. From our point of view, though, we're much more leisure-oriented. So there's a little bit of a silver lining for us, because when there's a lack of demand, well, those people on the supply side, they are more interested in working with a distributor like us to help fill that empty seat on a plane or an empty room in a hotel. That's unfortunately a little helpful to us, and you don't want it that way, but that's what's going to happen.
Well, that was the Bookings Holdings Chief Executive Officer Glenn Fogel speaking to Guy Johnson and Alex Steele. Coming up, while Tesla gets cheaper, the electric car company is splitting its shares. We discuss that next. This is Bloomberg.
climate change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get to another of our top stories on Tesla splitting its pricey shares in a 5-for-1 exchange. Each shareholder on August 21st will receive a dividend of 4 additional shares for each share they already own. Well, trading will begin on a split-adjusted basis on August 31st. Well, joining us to discuss all of this is our Danny Berger. So, Danny, first of all, what is Tesla's thinking in issuing the stock split?
In one way, Francine, this is a sign of confidence, or at least the management trying to signal confidence that they think shares will go higher from here. Because by doing this, Tesla stock, which right now is trading just under $1,400, if it stays around the same valuation, will be about $300 per share. So it also means that this is a benefit to retail and other small traders who otherwise had trouble affording Tesla stock. Now, this shouldn't really affect the price in theory, because the value of Tesla as a company itself doesn't change by splitting its stock. However, we do know that the retail crowd rather tends to favor Tesla. Robinhood, for example, the trading app that's based in the U.S., has 550,000 accounts that hold Tesla. That's up from 180,000 back in March. One point last week, there were 40,000 Robinhood accounts that added Tesla in 4 hours. So this is also a signal to them that it's safe to jump in, buy more of the shares, because it is now cheaper, again, just to buy an individual share of Tesla.
Danny, Apple also split its stock recently. What was the ultimate effect of that?
Yeah, this was a pretty recent one. About 2 weeks ago, Apple splitting its shares at a 4-to-1 exchange. And around the time they announced the split, we saw Apple shares reach a record high. It was also around a positive earnings result. And this also follows in the footsteps we've seen in the past. Companies like Alphabet, for example, also splitting their shares. Amazon did something a while ago as well. And if anything, this just really emphasizes that you look at these tech stocks, they have pricey valuations and therefore pricey shares. And again, it does seem like a signal from Apple and Tesla like that they think that those share prices can go higher, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest on Tesla and some of these stocks being split. Now, U.S. equities are actually advancing. We're seeing a similar trend with European stocks that are on the up. Gold rebounding after finding a support level at around $1,900 a barrel. Now, Bloomberg Surveillance continues in the next hour. Later today, we also speak with the Boston Fed President, Eric Rosengren. This is Bloomberg.
Risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Kamala Harris wins the Veep stakes. Joe Biden picks a Californian senator to be his running mate. Harris becomes the first black woman and first Asian American on a major party presidential ticket. A record slump, the UK economy shrinks over 20% in the second quarter, worse than its European peers. The Chancellor, Rishi Sunak, warns of many more job losses to come. And vaccine deal, Moderna will manufacture and distribute 100 million doses of its experimental coronavirus vaccine. In the U.S., shares jump in extended trade. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Lisa Abramovitz stepping in for Tom Keene in New York this morning. Lisa, great to have you on the program, and there's so much to talk about. We look at gold finding that support around 1,900, and we look at the dynamic of treasuries.
Yeah, and certainly we're also going to take a look at the political landscape in the United States with the Democratic candidate firming up what is going to look like, Fran, a big question about political risk heading into November.
Yes, so we'll have plenty more, of course, on U.S. politics. We start strong with Leslie Vinjer-Murray, who joins us shortly. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Lisa. Joe Biden is counting on Kamala Harris's ties to the African-American community and her self-branding as a progressive prosecutor. The Democratic presidential candidate made history by selecting the California senator as his running mate. Harris is the first black woman and the first Asian American on a major party presidential ticket. Before being elected to the Senate, she was California's Attorney General. China wants to discuss TikTok and WeChat at upcoming trade talks with the U.S. Bloomberg has learned the Chinese will bring up President Trump's prospective bans on the two apps. The Trump administration has cited national security as the reason a virtual meeting may take place this week. In Hong Kong, media tycoon Jimmy Lai has been released from jail. Lai was arrested Monday, the most prominent figure detained yet under China's sweeping new national security law. It's seen as a sign of how Hong Kong's independent justice system is being undermined. Lai's newspaper, the Apple Daily, is critical of China's Communist Party. And Airbnb is going public. Bloomberg has learned the home-sharing startup plans to file paperwork for a stock market listing in the next few weeks. Shares could start trading as soon as the fourth quarter. Airbnb's business has rebounded after being hammered by the coronavirus lockdown. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Lisa, Francine.
Thank you so much, Ritika. Now, this is what the markets are looking at. A lot of the focus, of course, is on the Moderna vaccine and some of the breakthroughs that we could be getting there. A lot of the focus also is on GDP around the world. I'm looking at European stocks actually rising with bond yields, gold rebounding after finding seemingly the support below $1,900 an ounce. Now, here in Europe, it's very clear that the banks are offsetting drops in tech and real estate shares on the European stock 600, and then, Lisa, the pound holding to the drop
up yesterday versus the euro. We did have some ugly data showing that the UK economy contracted last quarter by more than any other economy in Europe, Lisa.
Yeah, Fran, and picking up on that data, it's really interesting to me to try to understand why there's a risk-on tone today, and it's pretty much across the board with the NASDAQ futures leading up and actually they're exceeding the performance right now in the S&P, sort of a contrast of the past few days when we saw the NASDAQ underperforming. Meanwhile, we're also seeing the 10-year yield dip up a little bit. You're getting a little bit of that sell-off extended, and we're getting, of course, the dollar a little bit stronger the euro a little bit stronger versus the dollar, and crude oil going up a little bit. But I will say, Fran, really hard to understand why there's a risk on tone when you've got weaker than expected data. And meanwhile, you've got a virus is showing that it's not going away anytime soon.
Now, Joe Biden, Lisa, has picked Senator Kamala Harris to be his running mate. Harris is the first black woman and first Asian American on a major party presidential ticket. Once a rival for the top job, the California senator had long been considered the front runner for the number 2 slot, while Biden will appear with her in Delaware later today to deliver remarks. For more on all of this, we're delighted to be joined by Leslie Vinger-Marie, Chatham House head of U.S. and the Americas program. Thank you for joining us, Leslie. When you look what Kamala actually brings to the ticket, how will the dynamic change?
Well, I mean, people have been saying for a while, people watching this is the obvious choice. It's a safe choice for Joe Biden. This is a highly accomplished, experienced, moderate American female who speaks very clearly to the very strong concern across the country for racial equality. So she has that identity, and she speaks to the African American community, to the Asian American community, something that people aren't talking about, but I think a lot of Americans feel is that this is a multiracial female, the first to be on the presidential ticket. But I think the fact that she is a moderate, that she's not talking about radical changes to the economy, that she's really very much shoring up Vice President Biden's position in the party. Like him, she's highly experienced, she's moderate. It's a very interesting choice. I think that there is a hope that she will consolidate the position that he holds of strength amongst the African American community, amongst female voters, and that she'll really make it very clear that there's a very stark difference between these two choices that Americans will face when they go to the polls, whether it's on issues of the economy, on issues of immigration. But really what we're seeing is just a highly competent ticket at a time when America is in grave economic crisis and facing a tremendously difficult health crisis.
Leslie, if you look at the polls, is this President Trump doing really badly or Joe Biden doing pretty well? And how does Joe Biden's strategy need to change?
Yeah, I mean, clearly, those two things go together because it is an election that is about alternatives. The president is clearly doing badly. But, as we came up to January, we all know the economy was in a good position. The president certainly had a strong case to be made for winning, despite the fact that he really had never managed to move far beyond his base in recent historical terms. He hasn't been a very strong president. Joe Biden's kept a low profile, right? He's been biding his time. He's made very clear interventions at targeted moments, but he's really kept a low profile. This is a coming out moment. He has unveiled the one surprise that everybody's been waiting to hear about, and really now it all begins. I think we can expect to see a lot more visibility. We'll see Kamala Harris very, very highly visible. Remember that she took part in the protests and had a very active role and has been pushing forward on questions of police reform. So I think now we're heading into a very different period, but one in which the country continues to be, again, in grave crisis. And I think we will see a lot of discussion of that.
And Leslie, this wasn't a total surprise. Kamala Harris was the leading candidate to be picked for the vice presidential ticket here. I'm wondering if this is more catering to the progressive branch of the Democrats or whether this really appeals to the centrist of the party and just in general swing voters.
I mean, it's a very interesting choice. Kamala Harris is, defined as a moderate within the Democratic Party. She's a centrist on her economic policies. But if you look at the identity question, right, on the question of identity, it's very different from choosing a centrist male, a moderate male running candidate, or even a moderate white female running candidate. What Kamala Harris does is she delivers that call to take the question of culture, questions of immigration very seriously, but she does it in a way that really is straight up the middle of the Democratic Party. At the same time, Vice President Biden has made it very clear that he's seeking to build a broad church and to unify the Democratic Party. It's absolutely critical that the progressive wings of the Democratic Party, especially young people, feel inspired to come out and vote at a time when voting is not going to be easy. We know the story here. Getting people to the polls, getting them mail-in ballots, these are going to be very difficult things to do. The second that somebody doesn't feel inspired to vote, when the barriers are that high, it becomes a very difficult calculation. So this is a very interesting choice, but as you said, one that many people expected. Still, Vice President Biden played his cards very carefully. Even in the last few days, people, started to wonder whether it might still be Susan Rice or any other number of candidates. So I think it was still quite a moment last night.
Leslie, looking ahead to November, you talked about whether people will be inspired to vote. Will they be able to vote, given some of the absentee ballots that we're expecting? Where are we on that? How secure will the mail-in effort be?
Well, states are working very hard, state by state. There's a lot of variation. There's a real question about financing. There's a question about financing the post office, making this possible. And I think it's going to be a tricky and very complicated election. A lot of people who are following this very carefully are skeptical that we will have a result immediately. It could take up to 3-4 weeks. Hopefully it will be much sooner. But this is a very precarious time, and there are a lot of unknowns. What we don't know is what the direction of travel will be on the virus. Will it get worse? If it gets worse, if there is a renewed spread, I hesitate to say a second wave because we're not out of the first wave in many parts of the country. That could also add a whole different level of complexity. So I think it's going to be a very difficult election. But yes, people need to want to vote. And clearly the choices are very stark between the two tickets that they're going to be faced with. And so I think that generally when people think that the stakes are high and the choices are significant, they tend to turn out. But we'll have to wait and see.
Leslie, a viewer wrote in saying, what can we expect from a debate versus, the vice presidents? And I think there's one scheduled on October 7th in Salt Lake City. But are they going to be more prominent than in the past? Will the focus be more on, the candidates and the president, or actually will it also move to the vice president?
I think the vice presidential debates will be extremely important. Kamala Harris is a very articulate, and remember, she had that very tough exchange with Vice President Biden. That she has no hesitancy in taking strong positions. And already we're seeing from President Trump's Twitter feed that the line of attack is going to be, this is the radical left. They're taking over the country. We're going to see a lot of conversation about economic policy, about tax policy, about questions of Medicare, of social benefits. I think the push from the vice president will be that, Kamala Harris comes from the radical left of California and is going to erode the financial and economic base of the United States at a time when the country is in grave crisis. Very little evidence to suggest that, given that what we're seeing right now is a grave economic crisis under the current president. And unfortunately, despite some very, very good work on the part of the Fed and some early fiscal reforms that were absolutely critical, we're clearly seeing right now a failure of leadership on the economic front.
Leslie, thank you so much. Leslie Vinjamuri there, Chatham House head of U.S. and the Americas program. Now, coming up next, Steen Jacobson, Saxo Bank Chief Investment Officer. We'll talk gold. We'll talk treasuries. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Breaking news, Democratic presidential candidate Joe Biden has made his choice. NBC News has confirmed that Biden has picked California Senator Kamala Harris to be his running mate, the first woman of color in history to be chosen for such a position, ending weeks of suspense and making good on a promise he made during the primaries back in March to name a woman to run as his running mate, a job Biden himself held for 8 years under Barack Obama. So the Democratic ticket is Biden-Harris. For more, let's go right now to White House correspondent Kristen Welker. Kristen, what can you tell us?
Well, Lester, as you say, this is an historic pick by former Vice President Joe Biden, picking the first African-American female to be a running mate on a presidential ticket, and it comes after weeks of deep deliberations. She is, of course, a senator from California. She is someone who was in the primary running for president herself, and of course, we all remember that first debate when she took sharp aim at the former vice president, and that was something that really rankled some of Biden's supporters and something that was focused on during this process, something that he and his family certainly spent a fair amount of time thinking about. Is she someone who can be trusted and loyal? And ultimately, clearly, Biden making the decision that this is the person who is going to be the strongest running mate and person to serve with him if he does, in fact, win the White House. Now, what are some of the strengths of Senator Harris from the perspective of Joe Biden? She is someone who is tested, Lester, not only on the national stage in terms of having run for Senate. She's run a national campaign for president herself, so she's someone who has been under that type of fire. She's someone who brings a strong debate performance to the table, someone who they thought will be a formidable candidate against Vice President Mike Pence on the debate stage. So those are among the things that we are told are the reasons that Biden determined to pick Senator Harris. And again, this is going to be an historic pick. Biden was getting a lot of pressure to choose an African-American running mate in recent weeks, not only in the wake of protests nationwide in which people have been calling for change, but also because a lot of African-Americans feel as though this is an inflection point in the nation's history. Now, I am told that is just one of the reasons that Biden decided to pick Harris. This is someone with whom he feels he's not only going to have a strong partner on the campaign trail, but once he is in the White House. Lester.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.
Professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get your Bloomberg Business Flash. Cable giant Liberty Global has agreed to buy Swiss phone carrier Sunrise Communications. The deal has an equity value of about $5.4 billion, and it's aimed at strengthening the company's fiber cable and mobile services. Liberty Global is controlled by billionaire John Malone. It's a move that will make Tesla shares less expensive for the individual investor. The electric car company is splitting its shares in a 5-for-1 exchange that has the stock rising today. Tesla is up 228% this year. Kodak significantly increased its spending to lobby the federal government in the months before getting a $765 million government loan. The beleaguered camera company spent $870,000 on lobbying in the second quarter. Kodak hadn't spent any money on lobbying since an expense of less than $5,000 in 2019. Word of the loan offer sent Kodak stock soaring more than 2,000%. And that's your Bloomberg Business Flash. Lisa, Francine.
Thank you so much, Ritika. Now, this is what the market is looking at. So they're looking at a bit better than expected figures out of some of the banks. And so if you look at European stocks, they're actually up. U.S. futures are also on the up. But it's very clear that in Europe, it's technology that's going down. But actually, we saw advances in ABN AMRO, HSBC helping offset some of these drops in technology and real estate shares. I'm also looking at the pound. This is after we had data showing that the UK economy contracted last quarter by more than any other in Europe. And then I'm looking at gold. Silver joining the gold's rebound. Investors deciding the flight from precious metals amid advancing bond yields had actually gone too far. Up next, we speak with Joseph Amato. That's at 6:30 a.m., 11:30 a.m. in London. We'll talk gold next. This is Bloomberg.
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Lisa Abramowitz in New York. Now, let's get back to Steen Jacobsen of Saxo Bank. And Steen, we're talking a little bit about some of the equity markets and some of the markets in general. But yesterday, we had quite a big move. If you look at what Treasury bond yields were doing, they were climbing, cutting into this negative real rate that had supported, for example, gold. After these record highs and had a bit of a correction yesterday, and now it's floating back up. What do you do with gold right now?
I actually bought some more this morning. I'm adding to our position. Overall, our asset allocation is 20% in gold. It was taken down a little bit on the high side of what we saw over the last couple of weeks. I acknowledge the fact that it was expensive going into this week, and I also acknowledge that there was a risk that we will see this kind of temporary spike in real rates and inflation expectation based on the wrong premise, but nevertheless, that has been the narrative. So I've been adding to the position because at the end of the day, central banks are not going to change their tune. Governments are going to step up what they do in terms of spending money they don't have. And underneath all of this is debasement, demonetization, and ultimately, in my opinion, a loss of faith in the way we do economic policies today.
What exactly is, the gold ascent going to stop by? I mean, again, we saw this bit of a blip yesterday, Steen, but what needs to happen for gold to start going down decisively?
That we have a real economic policy, that we actually see a connection between the beta of the policies conducted, i.e. monetary fiscal policy, into the velocity of money. But there's simply no way in economics that more debt and more money can create that, because it reduces the velocity of money. At the end of the day, inflation comes from only one of two sources, either through velocity of money, which at the end of the day is net demand on lending through the banking system. Banks, as you know, has zero growth in actual lending. And on the other hand, like in Germany during the hyperinflation times, you lose faith in the nation, or Zimbabwe for that matter. And that's, to me, it's the more likely path. It's not going to happen tomorrow. But right now, you want to fade the move that we've seen high in interest rate, because they're based on the wrong premise that Russia has a vaccine, that there is a high beta between the economic and monetary policy and economic growth. It's absolutely the inverse relationship that's in place economically.
You've got a pretty dire prediction here. You're saying there's a debasement of the currency, a lack of faith in policy, and a disinflationary or even deflationary environment. So buy bonds of some of the countries that are engaging in the policies that you're talking about. This is where I don't understand. The U.S. selling record amounts of debt. Why do yields keep going down? Why do you see that as the likely path going forward, given the fact that people don't have faith in the U.S. policy?
So don't get me wrong, I'm actually having zero exposure to fixed income. I decided in June of last year that fixed income was dying as an asset class, not for institutional investor who for regulatory reason needs to have it in their portfolio, but me advising and doing business as a family office entity assignment. I don't need fixed income. I'm actually getting no protection, as you saw in March. But the reason that interest rate will continue to go down is, one, we cannot afford any increase in interest rate. Just see the magnitude of the move we saw in gold, or the magnitude of the move that we saw in during the COVID crisis. The leverage in the system, the collateral value backing the assets we have in place in the market are so over leveraged that I cannot even start to explain it to anyone. And as you say, Lisa, you're pushing back indirectly. I know you probably not necessarily disagree privately, but listen, I'm not negative. I'm just realistic. I'm describing an economic system. I remain grounded in economics. Economics, you can only get growth through investment in research, in basic research, in universities, in education, in reducing the amount of money and using price discovery. Lisa, we have zero price discovery. I mean, Italian bonds trading south of 1%. I mean, they haven't done any reforms. They haven't had any growth. And then people come up with all kind of excuses why. But at the end of the day, it's all backed by fiat money. And fiat money is fiat money. I mean, what does it say on a $1 note in the U.S.? In God we trust. I hope you're very religious because that's the only collateral value you have.
All right. Well, given all of that, you're talking about how leveraged the system is, and certainly there's been a tremendous amount of liquidity pumped in. But some of the same arguments that you're making with respect to fixed income could be made about equities, right? I mean, in some ways, you could actually say that equities have rallied even more. What are you going into instead of fixed income as the ballast for your portfolio?
Yeah, so we run long-term portfolios. We mimic under Chris Cole's concept of 100-year portfolios. And that really means very simplistically, 20% in gold, 20% in volatility, which is the replacement of fixed income, 20% in commodity trending, 20% in equity, and 20% in cash. That's the 5 component we have in our portfolio. It sounds revolutionary, but it's actually the only constituent and reverse engineering even you can do of a portfolio that will survive any kind of incidents in the world. Right now, I think you want to replace, if not 20% like we are, but at least 5-6% of your fixed income with a proper sort of insurance against the downside, which is to be long volatility. And Lisa, you know as well as I do, why is WIX trading at 25% when everything is good in the world?
Steen, thanks so much. Steen Jacobson there, all fired up, Saxo Bank Chief Investment Officer. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine, Lisa. Joe Biden and Kamala Harris will appear together in a virtual fundraiser today. It's their first appearance since the Democratic presidential candidate made the California senator his running mate. Harris is the first black woman and first Asian American on a major party presidential ticket. The stimulus stalemate drags on. The principals in the negotiations to get a new virus relief package haven't spoken since Friday. The White House says Democrats must reduce their demands for $600 a week in unemployment relief and for aid to state and local governments. Democrats say Republicans must put another $1 trillion on the table in addition to their original $1 trillion offer. The U.S. government has reached a deal with another potential maker of coronavirus vaccine. Moderna will supply 100 million doses of its experimental shot in an agreement valued at up to $1.5 billion. The company already is getting $955 million in government aid to test the vaccine. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Lisa.
Thank you so much, Ritika. Now, coming up on Balance of Power, Richard Haass, Council on Foreign Relations President. He'll be asked a thing or two about China. He'll be asked a thing or two about the new vice president pick of Joe Biden. That's at 12 p.m. New York time. That's 5 p.m. in London today. And this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Lisa Abramowitz in New York with Francine Lacroix in London. Meanwhile, the travel industry, if you want to go on vacation and can't, continues to suffer from the coronavirus pandemic. Glenn Fogel, chief executive of Booking Holdings, doesn't expect demand to return until a vaccine is available. He spoke with Bloomberg yesterday.
Certainly people are seeing things better than the lows in April and March. It was horrible then. The things that you were just saying, certainly things have improved a bit. That being said, you're right. Until we get a vaccine or some sort of effective treatment, travel's going to have some issues. And look, it's great that things are better than they were, but we are all still far away. And you just heard those occupancy numbers, and let's face it, a half-filled hotel is not profitable. So what we really need is that sense of safety. People want to feel that it's okay to travel, and the thing that's going to help us get there is a vaccine, and hopefully we'll see something in the not-so-distant future.
Is the worst behind you, do you think, Glenn? Where do we go from here? Is it better, or is it kind of plateauing now? I'm curious as to the kind of trajectory you think we're on.
Well, I think a lot of people have been talking about recent flare-ups in different parts of the world, places that have been fairly good, but now all of a sudden there are coming out with more infections that are causing lockdowns. You look in Australia and Melbourne. You look at some of the issues that happened in Hong Kong. There are parts of the world where things were great or very good, and now they're not so good. Even in Europe, as you're well familiar with, you're seeing a bunch of flare-ups here and there. So I think we're going to be on a bit of a roller coaster for quite a while until we get that vaccine. In my point, it doesn't really matter. We need that vaccine or some sort of effective treatment, because when you read these things, it's terrible news items when people are still getting ill, and unfortunately, some people not making it through their illnesses. It scares people, and people want to feel safe. You're going to go on a holiday, you don't want to be nervous.
So, Glenn, I mean, all of that leads to, cash burn, et cetera. You didn't have to raise any cash so far. Your cash position is better than some of your peers. You are cutting some of the workforce, and I'm wondering how many levers left do you have to sort of make it through until there is a vaccine?
Well, I think we actually did raise over $4 billion. So we felt pretty good about that $4 billion raise. But, we are feeling comfortable in terms of where our balance sheet looks like, and we've been very clear to the street. We have no problem getting through this crisis. That being said, what will the other side of the hill look like? What's going to change in terms of the industry? And you're mentioning about business travel, and business travel does provide a lot of revenue to some of the big chains, and certainly the front of the airplane is where those people are paying those big fares, helping those airlines. And what's going to happen? Our people are going to be going on as many business trips as they did in the past. From our point of view, though, we're much more leisure-oriented. So there's a little bit of a silver lining for us, because when there's a lack of demand, well, those people on the supply side, they are more interested in working with a distributor like us to help fill that empty seat on a plane or an empty room in a hotel. That's unfortunately a little helpful to us, and you don't want it that way, but that's what's going to happen.
Well, that was Glenn Fogel, the Booking Holdings Chief Executive Officer. Now, global coronavirus cases surpassed 20 million yesterday, and the race for a vaccine is definitely heating up. Russia is boasting a vaccine could be ready in weeks. Meanwhile, drug maker Moderna will manufacture and distribute 100 million doses of its experimental vaccine. Well, joining us now is Paul Hunter. He's Norwich Medical School professor in medicine. Professor Hunter, thank you so much for joining us. How far away are we from a vaccine that you and I can actually take and feel safe?
Well, that's a difficult question to answer. The big question always with vaccines is, can we prove that they're both effective and safe? And probably one of the UK vaccines, the Oxford vaccine, is still some by Christmas to enable it to be given out this year, but that is still uncertain. And many people experts who know a lot more about vaccine development than I do are still being very cautious about whether or not actually that it will ultimately be an effective vaccine.
Paul, what kind of vaccine would it be? Is it similar to flu where you have to have the jab every year? What do we understand about antibodies?
Yeah, I mean, I think it is. Again, this is a big uncertainty. My best guess, reading the reports that are around and knowing what I do about other vaccines, is that it's likely that in the first year you'd probably need to have it twice, maybe about a month apart, to give full protection. And then possibly after that, particularly I think for vulnerable groups, you may well have to be giving this once a year, probably with flu vaccine, and probably to people who currently are recommended to take flu vaccine.
Dr. Hunter, Vladimir Putin has given his daughter the Russian vaccine that he says is the first out there. Would you give it to your daughter?
Well, I don't have a daughter, but I would be nervous about giving it to my son at the moment. I've not seen any of the data, and in fact, I don't think anybody in the West has seen the data that has showing that it's safe and effective. And if it is, then well done for Russia in producing it with speed. But again, you know, one of the big problems with vaccine is because you give it to so many people, you have to really show that the vaccine is safe before you can start giving it widely. Certainly in the West, we're very careful about that, and I think that's the stage we're at the moment, proving that it's effective and safe for large numbers of people.
When do you think we're going to get back to some sort of normalcy, given where we are in vaccine development?
Personally, I've been sort of saying next April-ish. And that's as much a guess, hopefully an educated guess, as based on any really hard data. And my suggestion for that is that although probably in the first year we're not going to see much seasonality, these coronaviruses generally spread more during winter, so I suspect after we come out of April, then the natural tendency for these viruses to spread will be reduced somewhat, and hopefully by then there'll be a vaccine, and I think that will be when we'll be looking at life really beginning to get back to normal.
Thank you so much, Paul Hunter, the Norwich Medical School professor in medicine. Now, coming up in the next hour, we continue to track COVID-19 with Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. That is at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
I'm Lisa Abramowitz in New York with Francine Lacroix in London. I got to say, Francine, yesterday, gold very much in focus, the biggest sell-off in gold in dollar terms since 2013, and it was unclear exactly why. And right now we're seeing a little bit of a bounce back to 1929, but still, I mean, again, it sort of goes back to Steen Jacobsen's point, this idea of the massive amount of leverage in the system leading to some pretty violent moves.
Yeah, and yesterday, I have to say, I was playing Monopoly with my kids, and actually I had to look up because I was looking at Bloomberg, and I was saying, wait, what's happening to gold? And it took me a while also because I was out to understand exactly what the dynamic was there. But yesterday was the biggest drop, I think, in 6 or 7 years, and it was quite sudden. Again, that actually means quite a lot. You know, it cut into the negative real rates that had supported the metal, but actually it's unclear what it will take, which is why Steen was so interesting to go back on the reversal on the other side, Lisa.
Well, let's find out exactly what was going on from someone who actually knows what they're talking about. Because yesterday I was just looking at the swoon, the biggest since April 2013, and wondering what exactly is driving this. Mark O'Byrne has better sense than I, Goldcore Research Director. Mark, what was sort of behind this huge decline? Was it the increase in real yields in the United States? Was it just profit taking after an incredible rally?
As ever, it's very difficult to pinpoint exactly, but it tends to be a combination of these factors, Lisa. But I think primarily it was profit-taking, and we were quite overbought in the short term. We'd see a massive move up in a very short period of time. And as ever, you know, as you know in markets, you tend to see 2 or 3 steps forward and 1 step back. So, yeah, you're right. It was a more than $100 drop, minus 5.6% on the day. It was a very large drop indeed. And I think everybody was expecting a pullback, and I think we were expecting quite a sharp pullback. But when it came, you know, 5.6% in one day is quite a significant pullback at the same time. So, but I think it's healthy. It's healthy for gold market because it had become overbought and was coming a little bit, you know, frothy in the short term, shall we say.
Mark, I'm struggling to understand the narrative behind gold right now. Is it an inflation hedge? Is it a hedge against potential risk-off feeling? Is it just sort of the balance of the portfolio instead of fixed income given how low yields are? Or is it simply a matter of how much liquidity has been pumped into the system, the devaluation of fiat currencies, and gold sort of being the predominant alternative?
Yeah, it's a combination of all those again, and you've sort of hit the nail on the head with a few of them. But I do think that the last one is probably the most important because, you know, there was quite significant financial, economic, geopolitical risks a few months ago at the start of the year before we came into the pandemic and the government lockdowns and the response and the response of the lockdowns and how that's really impacting our economies in a huge way. So yeah, we're already very vulnerable, and the scale of debt in the world was just astronomical, you know. So the U.S. debt before we came into this crisis was around the 23 trillion mark, and we've gone up 3.5 trillion since February. So, you know, that's huge. And I think people lose sight of the scale of what a trillion is. You know, we used to talk about millions 20 years ago and then billions, you know, 10, 15 years ago. Now we talk about trillions. And a trillion is one with 12 zeros after it, you know. It's a very, very large number indeed. And I think people lose sight of that, even the financial experts and people like us who work in markets. Because you read it on Bloomberg, you read it in Reuters, and it's a dollar symbol with 1 and a T after it. But the gravity of 1 with 12 zeros is not understood by people. And you know, we have massive government spending now, and deficit spending, excuse me, because they're already hugely in debt. And we have the central banks basically buying, electronically creating dollars with their keyboards and buying assets. And they're not just buying sovereign bonds, which is obviously needed during the last financial crisis, but they're buying junk bonds, they're buying stocks, they're buying ETFs, you know. So the long-term ramifications, I think people are very concerned about it. But it very much depends. There's different investors with different motivations, but that is one of the primary motivations for most of our clients anyway.
Mark, I mean, what will it take to actually burst the gold bubble? And even if it does burst, given all the various factors at play that you were just talking about, will it actually go below $1,700?
It's possible, yeah. I mean, the resistance was at 1700, Francine. So as we know, the traders look at these technical levels and they can gravitate to these levels. So resistance was 1700 to 1800, and then we broke through there very rapidly. Indeed, it went up to well over $2,000. So we tend to see resistance become support, and I think we'll see support at those levels. I don't think there is a bubble just yet in the gold market because most of the buying is there's no gold rush, now that's the headline that's beloved of headline writers is the gold rush. There is no gold rush because we're very busy, but most dealers around the world are very busy indeed, but it's from a very low base, and if you look at the amount of ownership in the gold in the world of retail investors, it's still very low. A lot of the money that's going in, and you see this with the ETF holdings, it's actually institutional money. So it is a combination of the risk, the safe haven, the hedging the devaluation of currencies, but it's also, I think, concerns obviously about negative interest rates, negative yields on bonds, and gold is actually a great source of returns in the long term, and people lose sight of that fact. It's done 10.5% per annum over the last 15 years.
Right. Mark.
Yeah,
thank you so much. Marco Byrne there, Goldcorp Research Director. Now, coming up, we'll have plenty more on gold. We'll also talk about treasuries. Coming up in the next hour, David Rosenberg. He's Rosenberg Research Founder and Chief Economist. We'll have plenty more on the markets. We're just having a good conversation with Marco Byrne on gold and whether that key level of support is still at 1700 or whether it can actually be lowered in a correction. We also had the UK, the worst slump in Europe, raising pressure for a rebound in the second half of the year. This is Bloomberg.
New order placed for British pound. I'm placing a new order to sell short at 130.505. I'm placing a new order to sell short at 130.505.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate.
I opened new short position at British pound, on British pound at 130.505.
Good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Kamala Harris wins the Veep stakes. Joe Biden picks a California senator to be his running mate. Harris becomes the first black woman and first Asian American on a major party presidential ticket. A record slump. The UK economy shrinks over 20% in the second quarter, worse than its European peers. Chancellor Rishi Sunak warns of many more job losses to come. And vaccine deal. Moderna will manufacture and distribute 100 million doses of its experimental coronavirus vaccine in the U.S. Shares jump in extended trade. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Lisa Abramovitz stepping in for Tom Keene in New York. Lisa, we had a great hour looking at gold, looking at some of the dynamics with treasuries, and, of course, your U.S. politics, left, right, and center.
Yeah, Tom had to leave because he was buying some jewelry for Mrs. Keene, and that was sort of him trying to get in on the top of gold. Definitely a sign that it's going to be a rocky road ahead for the precious metal.
Yeah, it's so expensive, you can't buy anything for the rest of us. So we'll get plenty more on some of the precious metals, maybe looking at silver as well. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Lisa, as we're discussing, Joe Biden is counting on Kamala Harris's ties to the African-American community and her self-branding as a progressive prosecutor. The Democratic presidential candidate made history by selecting the California senator as his running mate. Harris is the first black woman and the first Asian American on a major party presidential ticket. Before being elected to the Senate, she was California's Attorney General. China wants to discuss TikTok and WeChat at upcoming trade talks with the U.S. Bloomberg has learned the Chinese will bring up President Trump's prospective bans on the two apps. The Trump administration has cited national security as the reason. A virtual meeting may take place this week. In Hong Kong, media tycoon Jimmy Lai has been released from jail. Lai was arrested Monday, the most prominent figure detained yet under China's sweeping new national security law. It's seen as a sign of how Hong Kong's independent justice system is being undermined. Lai's newspaper, the Apple Daily, is critical of China's Communist Party. And Airbnb is going public. Bloomberg has learned the home-sharing startup plans to file paperwork for a stock market listing in the next few weeks. Shares could start trading as soon as the fourth quarter. Airbnb's business has rebounded after being hammered by the coronavirus lockdown. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Lisa.
Thank you so much, Ritika. This is what the market is looking at. The market is trying to figure out exactly what the fundamentals in economy mean for some of their positioning. Now, what I'm looking at here in Europe is European stocks rising. If you look at U.S. futures, they're also gaining. Gold rebounding, finding its support below $1,900 an ounce. But yesterday we were talking about a possible bubble bursting or a correction. Not so today. Silver also joining the gold rebound. Investors deciding that the flight from precious metal probably amid advancing bond yields had gone too far. And then I'm looking at pound holding on to the drop versus the euro. We did have some pretty ugly economic data out of the UK showing that it's been hurt in the last quarter, actually in the first half of the year, Lisa, by more than any other European country.
And Francine, if you dig under some of the data, some of the risk-on feel in the United States, you're seeing the NASDAQ actually outperforming today in futures trading the S&P, which is interesting. It's actually a break in the trend that was sort of a couple days, and people were hoping it would be a rotation into some of the more cyclical areas of the market. Does not seem to be the case today. You're getting a bid into oil because of that risk-on feel. 10-year yields bleeding up further after a couple of days of selling off. Interesting that this comes before a $38 billion auction of the debt. Another record of longer-term notes the U.S. is selling. Kind of interesting to see this kind of mood in the Treasury market ahead of record issuance and ahead of the U.S. election, which brings us to the news of the morning. Joe Biden picking Senator Kamala Harris to be his running mate. Not a huge surprise. Harris, California senator, former prosecutor, former presidential candidate, and the first black woman and first Asian American on a major party presidential ticket. You could hear them today. Biden will appear with her in Delaware. Joining us now, Kevin Cirilli, Bloomberg's chief Washington correspondent. Kevin, can you speak to who in the Democratic Party this pick is catering to?
Well, she is a bridge, so to speak, on a host of different issues. Well, first and foremost, between the progressive wing of the party and the centrist wing of the party. She's had to navigate in her time in the Senate, Lisa, with regards to trying to appease both the middle and the far left on issues pertaining to healthcare, for example, and environmental standards. In terms of generational, she also is a generational bridge between a next era, potentially, of Democratic lawmakers. And then lastly, she represents a diverse pick. I mean, she is a historic pick in the sense that she would be a glass ceiling shattering type vice president. So beyond all of that, from a policy standpoint, however, you really could not have picked someone to more sharply contrast the current vice president, Mike Pence, on a host of different economic issues. On Iran, she wants to rejoin the Iran nuclear disarmament deal. On how to deal with China, and on environmental deals. She is also a supporter of the Green New Deal and that framework. So, and of course on social issues as well. So on the issues, it's going to be a fascinating vice presidential debate when she's up there with Vice President Pence.
And one of the key questions is getting people to vote, energizing the base. Will Kamala Harris energize the Democratic base?
Well, Lisa, you and I were talking about this before I came on air. I mean, it's a little bit surreal, right? I mean, typically when I cover these things, there's, pomp and circumstance and confetti and balloons and whatnot. And now they're going to have to do this via Zoom or Skype and a virtual convention. But there's no doubt, I think, Twitter put out some stats yesterday that I was looking over before when I woke up this morning. I mean, just how much plugged in the progressives are for this. And even the president in public comments yesterday already offering some political attacks, calling her phony Kamala.
Kevin, we were speaking to Steen Jacobson of Saxo Bank, and he was saying actually the clients he's speaking to still think President Trump is a two-term president. I mean, what do the polls say? I know we're, August, September, October, November, 2 months and a bit is a long way away.
It's an eternity in politics, especially it feels like this year alone, Francine. But look, I think that what's next on my radar? You've got the conventions next week, and it's going to be fascinating to watch to see all of the different ideological spectrum on display on the virtual convention. Then you've got the Republican convention, and then you have the debates in September. So much can change here. The strategist that I spoke with yesterday on the left said that Senator Harris is a safe pick. However, the strategist that I spoke with on the right said that it played right into the president's hands. But from a market perspective, when I talk to economists, they're looking at her policies. And on the issue of China, I would note she did introduce legislation that would make it easier for the United States to go after officials in China who steal U.S. intellectual property. Why do I bring that up? Because no matter who wins, whether it's President Trump in a second term or Joe Biden, the U.S.-China relationship is still going to be incredibly turbulent, to say the least, in the short term.
I mean, Joe Biden, does he need to get back the limelight, Kevin? He's been, winning in the polls without really anyone hearing from him much. Is this a strategy that he can continue until the election?
He wants to make this a referendum on President Trump and not a contrast election. And in terms of how the past couple of months have gone, Francine, here in the United States, the president has run against COVID-19. Then the president has run against a stalemate and an impasse in Congress. And now the president is running against Senator Kamala Harris. He has yet to be able to draw a significant contrast with Joe Biden himself. That's going to change after the conventions. But the final point that I would note here is that a handful of polls just came out over the last couple of days. The president is only trailing Joe Biden by 6 percentage points in Pennsylvania. Granted, the president carried Pennsylvania, and I'm hard-pressed to find a political strategist who thinks that he can do that again in 2020, given the dynamics of that state. But I mean, when you think of the past couple of months, how difficult it has been, to use a neutral word, for the president and his allies in Pennsylvania to only be trailing by 6 percentage points. This is still very much a race.
Meanwhile, the U.S. economy very much challenged right now, the unemployment rate above 10%. Where are we in terms of another fiscal package? You talked about a stalemate in Washington.
there's still a stalemate. And look, I mean, I think in terms of executive order, the president likely is going to have to weigh using additional executive orders to get that done. I mean, I sound like a broken record. I wish I had some more news to report on this, truthfully. But at the end of the day, they're just banging their heads up against the wall, to use not literally, figuratively speaking.
Thank you for clarifying that, Kevin.
I have it drained into my head from Penn State journalism school. Don't use any cliches, especially this early in the morning.
No one's imagining them banging their heads actually against the wall, but carry on.
Maybe they would get something done, Lisa. Oh. And so I think from that standpoint, I think that there's going to be more fiscal talks, though, ahead of the election as it relates to pharmaceuticals, pharmaceutical companies, especially as vaccination news continues to come public, and on the issue of infrastructure. So they're still worlds apart, but they're worlds apart by like $2 trillion, and that's why this is so remarkable to see the impasse.
Kevin, what can we expect just in the next couple of days? So we had the announcement of Kamala Harris yesterday. I guess, does it expose the Biden camp to a fresh line of attack from, the Trump camp, or does he wait a bit?
No, I think even like just from a TikTok perspective, you've got the announcement that was made, and then less than 30 minutes later, the president's reelection campaign put out a statement attacking her record, and then the president was at the podium within a couple of minutes later yesterday at the White House, and also saying that this was a risky pick and his top choice to run against. So from the political standpoint, they're already trying to characterize her. I spoke with several strategists yesterday after this pick was announced, who noted how will this, in the COVID-19 pandemic, how will she be able to campaign? She is, anyone who's covered her, anyone who's watched her on Capitol Hill, she arrived in the Senate as the junior senator from California, but she had that, I would call it the political it factor that several lawmakers have when they come to Washington, whether it's former Senator Barack Obama before he was president, or Senator Marco Rubio to some extent. I mean, there are certain senators who arrive there and you get the sense that they have broader political ambitions. She had that, and she loves to campaign. Even during the crowded Democratic presidential primary run, she loved to campaign. She loved to host those events in a way that, quite honestly, Senator Elizabeth Warren had too. So how will she balance that loving to campaign in an era where campaign rallies are essentially non-existent or incredibly small? So we're going to have a joint appearance from them. That's what I'm watching for. How will they play that? It really will be a dress rehearsal of sorts for the convention. Will they be able to capture some of that enthusiasm that they want to have from the optics standpoint? And then we go into the conventions virtual. How will they be able to have, I joke about it, but truthfully, how will they be able to manufacture some of that enthusiasm that they would have been able to have in a great stadium, so to speak? And then I would anticipate that typically there's a joint interview appearance before the convention, so we'll likely get that on one of the networks this weekend. And you can guarantee that she's going to be asked about that contrast that she drew in the first Democratic presidential debate when she took on now, who could be her boss.
All right, Kevin, thanks so much. Kevin Surley there, Bloomberg chief Washington correspondent, with a terrific briefing on U.S. politics. Now, coming up next, David Rosenberg, research founder and chief economist. He's coming up shortly, and this is Bloomberg.
is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Hard times are here. Hundreds of thousands of people have already lost their job, and sadly, many more will. But I will say to people, although tough decisions lie ahead for all of us, no one will be left without hope or opportunity.
Well, that was the UK Chancellor, Rishi Sunak, warning of more pain to come. Joining us now is David Rosenberg, Rosenberg Research Founder and Chief Economist. David, we wanted to start with the UK just because if you look at the number where GDP fell by more than 20% in the second half, it's more than any other European country. I mean, what do we know now about, possible lockdown and the impact on the economy? Does it need to be full lockdown, but maybe shorter than this protracted open and starting the economies again?
Well, look, I don't think that we're going to be going to full lockdowns anywhere anymore. I think it's just not just politically feasible, but we've seen what the impacts are on the economy, and it's going to become very difficult to lock things down totally, then bring things back, and it creates just more economic instability. So I think what you're going to find, as you've seen in the States, for example, are these rolling partial reversals in the reopenings, and then as the numbers get better, things will reopen again. We're really in, and whether it's in the UK or really anywhere globally outside of a few countries, although we're seeing even in New Zealand, which was a darling, now they're getting an outbreak again, just showing how contagious this COVID is. But I think we're into just a series of sine waves. I don't think that actually the UK is really much different than anywhere else. Yeah. We're seeing just a sine wave. That's why I call it a series of small W-shaped economies. I'm not even calling it a recovery because it's not even clear that the recessions are over if you're looking at the big picture. Right. You reopen, the economic data look better, then you get the renewed outbreak and the infections, and then you close down partially, the economy slows down again. And so I think that's what we're going to be seeing, through most of the global data, is almost like a sine wave type of economic performance.
So, David, if you look at, what you see as bubble territory in the markets, like, what are you seeing right now? I know in your research, you highlight that the top 10 S&P 500 stocks command some $8 trillion in market cap. Given the earnings we saw from them, is it justified?
Well, it's... I guess you're going to find that there's a big debate as to whether or not you want to call this a bubble. And even though the valuations in the mega caps are in nosebleed territory, the comparison is always, well, look where they were in 2000.
Well, I'm placing stop on profit for British pound at 130.48.5. Stop on profit at 130.48.5.
To even their robust growth prospects. They're just too expensive. Those are probably the ones that you want to buy in the pullbacks, and maybe we're starting to see this pullback in the growth area of the market. I have more problems, to tell you the truth, with this value proposition. That we're going to be getting a sustained resurgence in the financials or in the resource stocks or in the industrials, because to have the value proposition work, you need to have a sustained bear steepener of the yield curve. I just don't see that happening with a degree of excess capacity, which is deflationary globally, and especially in the United States. And frankly, when you're taking a look at the real-time economic data, look, we had vertical down, and then we had reflexive rebound. Now things are stalling out. There is no sustained reacceleration in the U.S. economy. And I'd say actually, including China, even the global economy. The supply side in China has improved. The demand side has lagged well behind. That's why the underlying inflation numbers in China are actually melting. It's telling you something about the gap between demand growth and supply growth. You need to have real sustained inflation. You have to have reacceleration of global economies. You have to have bear steepeners, the yield curves, for the value trade to work out. And I have actually more problems with that proposition than I actually do with the growth stocks, tell you the truth.
David, a lot of people would agree with you that basically the Apples and the Amazons of the world aren't exactly going to lose value. They may lag behind for brief periods, but definitely a safer place to be. Yet you call this a no rhyme, no reason market. Is it just a bet on federal bank and the Federal Reserve and on central banks globally that they'll continue to pump liquidity into the system to go into those growth names at such high valuations?
Right. Well, that's exactly it. And the Fed has made it very clear that we are still into trickle-down economics. We are going because the initial impact of Fed policy is not on the real economy. It's on the financial economy, and then with a lag, it has an effect on the real economy. I mean, we've seen this type of policy before, and naturally, the Fed is not a real lender. It's a provider of liquidity. And we are seeing liquidity like we have never seen before, and that's really produced this tremendous momentum, but especially in the areas of the market that are longer duration. The growth stocks tend to be longer duration, just like long-term treasuries, which have, notwithstanding the backup in yields in the past couple of days, 30% total return this year. In this sort of environment, you want to have long-duration assets, and that's why the growth stocks have done so well. But, yeah, I think that they're in very expensive territory. I mean, everything is basically, stupidly priced. I mean, when you have an aluminum company come to market, a double B plus, and they're in a great part of the market. They make aluminum cans. We all need aluminum cans, especially with what's happening. And they can issue a bond sub 3% yield.
David Rosenberg, Research Founder and Chief Economist. This is Bloomberg.
All the lodge facilities and on all tourist facilities within the Mara, both in and out, they have all closed down. And we get much of our revenue from the park entry fees and other sources like the balloon safaris, balloon tariffs, even from the lodge rents, and all that has gone down. the surrounding community, when they are desperate, then they can do anything to hunt. And we have been getting such kind of cases of bushmeat, especially bushmeat trade. And we have arrested quite a number. So far, we cannot say for commercial poaching, no, it's only for bushmeat trade. And they kill just because they are desperate to get meat.